Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Wednesday, July 15th. We are midway through July, which is kind of crazy because in the next 2 weeks, we'll be done with July. We'll be in the midst of big tech earnings, and we will be on our way to August, which basically is, the last month of summer. We got a few weeks in September, and then we are into September through December, which quite frankly is my favorite time of the year. You got Christmas, Halloween, Thanksgiving, a bunch of birthdays, but it is crazy how fast 2026 is going and how volatile this market has been while trying to navigate the year of 2026. And the fact that we're going to be in 2027 is also just kind of crazy because like 2027, like that number in and of itself is wild. But we will be there soon, and we've got a lot of stuff to analyze as we get there on the way. We've had a bunch of things happen over the past 24 hours that we will discuss. We've got a bunch of earnings to talk about. PayPal, this news broke last night. If you were up at like 12 a.m., you saw the offer. PayPal is up 20% right now. A lot of people might be wondering, how the hell is PayPal up 20%? It's because Stripe is trying to buy them out. So we will talk about this offer as well. I don't know if this buyout's going to be successful because I feel like the premium they're trying to pay is still undervaluing like the core business itself. So, I mean, from a shareholder perspective, I feel like PayPal is going to go back and try to get a better deal, but they did get an official buyout offer, which is about $53 billion. And so we'll talk about it, but that's why that stock is up 19%. Asml, they had a really good earnings. They increased their guidance. Stock's only up 3% right here. It's up a lot year to date. So I think the lack of stock movement shouldn't be seen as a reason for why this company did not put up good numbers, but it's one of the problems that we've kind of discussed going into earnings, which is that so many of these stocks have moved so heavily that if they do put up really good numbers and the stocks don't move, is that necessarily bearish for like short-term price action, or is that something that we're just all going to have to deal with given a lot of these names are starting to consolidate? Now, Asml also is a $650 billion company. Air Test Systems, which is like a $3 billion company, is up 30%. Because they also put up really good numbers, but the lack of market cap in this in terms of its size allowed this to have a better run, which I think is also potentially setting the precedent for the photonics names like AAOI, Lumentum, Coherent, AXTI, etc., to start to get a little bit more of a bid. SK Hynix was up 24% yesterday. It is now down 7% in the pre-market. It is still trading at a 30% premium to its South Korean version of its shares. Yesterday was trading at a 50% premium to the South Korean version of its shares, which begs the question, why are people in the United States paying 50% more for a piece of SK Hynix stock than the South Koreans are? Don't really have answers to that. Micron was up last night. It was passing $1,000. Now it's down in the pre-market. So again, the memory trade continues to be a little bit on edge in terms of how the market is really interpreting it, but at least it's not in the kind of cascading waterfall downwards movement that it has been over the past couple of days, and it's starting to stabilize at least a little bit more right now. Rock Lab, that's up 1.5%. Tesla, that's up. Nebius is up 2% after going down 7% yesterday. CoreWeave's up a little bit. You got Coherent, that's up. Lumentum, that's up. SpaceX, that's up. So, I mean, the broader pre-markets are green. Morgan Stanley, they crushed earnings, and the earnings picture along with some of these macro headlines are a reason why I think we're green. Morgan Stanley stock is down even though they had good earnings. But, I mean, it's middle of the week. Hopefully we have a generally okay day. We've had an okay Tuesday. Monday was a little bit worse in terms of momentum. Obviously, that IBM news really gutted the software names yesterday as they were trying to make a rebound. IBM still down 25% from yesterday, up about 1.8% today. But overall, I think the sentiment on the semi trade now is contingent on earnings, and we have TSM tomorrow, but ASML definitely showed that earnings are in the right trajectory. So let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. Brian, Kyle, Connie, June, Chels, Lincoln, Otis, Stano. Thank you all for being here. I think we got a bunch of pieces of news dropping right now on Nabesis and Oracle, so we'll get right into those headlines before we get into the other stuff. The U.S. has started striking Iran again in the pre-market. Not really having that much of an impact on oil prices or inflation, but obviously inflation has been sticky over the past few months. Oil at 79.82, so it's up about 0.5% right now. CPI was really good yesterday, which is part of the reason why I think also stocks are getting some recovery, and also why Bitcoin and Ethereum are getting some recovery as well. Do we get PPI today? I don't think we get PPI. No, we did. Didn't I yell at you guys for not knowing we had CPI yesterday? This is This is called being a hypocrite. All right, PPI. What do we got? Producer prices in the U.S. declined 0.3% month over month in June 2026, following a downwardly revised 0.6%. Is that a beat? That was at 8:30. I'm definitely late on PPI. That is... Oh, that's good. So consensus was we would go up 0%. We actually came down negative 0.3. That's really good. Oh, that's probably the reason that we also are having a nice little green market right there. Core PPI 0.2, expected 0.4. So CPI was the consumer price index. Producer price index is how much producers are actually paying for those goods and services that they're charging for. Wow, that's actually really freaking good. 0%. We came in at negative 0.3. Let me get some more details on what we're seeing for PPI, but that's actually not bad at all. So June PPI, the headline was 5.5, below expectations of 6.2. Core was at 4.7, below expectations of 5.2, and then month over month again, negative 0.3. Let me put PPI in the title of the stream so that it sounds like I knew that PPI data was being reported today. Dude, I totally forgot. Usually PPI is after CPI. I don't know why I forgot about that. But okay, so there you go. So we had 2 really good days of inflation doing what we needed it to do in order for us to get a little bit more momentum on stocks. Now, obviously, oil is spiking up again, which is not a good thing. So as long as that continues to be in the rear view mirror, that could potentially have some implications for July. But overall, not the worst thing in the world when it comes to PPI, as we are seeing a bit more of that momentum here to the downside on inflation. Let's get a little bit of coverage on that, and then we will get into some of the AI headlines that we've got. Robinhood's up, Tesla's up, Palantir's up, ARM is up. So it's similar to yesterday. I mean, you've got some good earnings momentum. We'll talk about Asml in a second, but PPI, CPI together, I think this is the best PPI we've had in, quite frankly, 7 months. CPI was the best we had in 9 months yesterday. That is definitely helping the broader market right here.
4%. My friends who are truckers, we're thinking of you, and we see diesel down 18% in this number here. The core down 0.2. Trade was up 0.4. I don't really like that number. It's why I completely agree with Rick on the ex-food, energy, and trade number, the one to look at. But more importantly, when I look up the chain, and I do this every time the PPI comes out, I look at the pressure beyond just at the producer level, look at intermediate goods. That is also doing well, and not much pressure in there coming down the pike. I believe the intermediate number was down 1.2%. So that's something you want to be careful about and say, you know what? If that's happening, then there's not the pressure up the pipeline that's coming down. Another reason to be optimistic about this number is we know that the BLS is making some important technical changes to this index that will take effect in September about inflation when it comes to software and some other technical tech goods out there, and that's going to help it in September as well. So I think what we're seeing here is this concern about the Fed needing to hike in order to deal with inflation, maybe coming off the boil. And while I say that, I'm going to take a look at the probabilities, which were down just a second ago. Now they're down to 52. So it's still out there as a odds-on bet for September.
There's no way the Fed is hiking. There's still a 50% chance in September that they would hike, but there is no way, dude. Not with these types of numbers. I mean, this is incredible. By the way, look at ETH and BTC. I think they love the inflation numbers coming in. The Clarity Act updates we talked about yesterday should obviously be a benefit to overall inflation and the eventuality of that inflation or the eventuality of that digital asset regulatory framework becoming more meaningful for Bitcoin, Ethereum, Solana, all the different digital assets that are out there. But if inflation's coming down, there's more liquidity in the system, there's more chance of a rate cut. I think that's the simplest reason for why ETH and BTC could get some love. MicroStrategy pre-market is up about 2%. BMNR, after having a 10% day up yesterday, is up another 3%. It's the best stretch, I think, for both of those names in the past few months right now. So Bitcoin and ETH are really loving this CPI and PPI coming down, and hopefully that should affect all stocks as we get into the end of this month right here. ServiceNow, that's up 1.2%. Micron's still flat. SK Hynix down 7%. Wix is up about 1%. And then PayPal up 19% right here. as we're seeing some of this love. Could this be a dead cat bounce in crypto? It could be, but I also think that, I mean, Bitcoin and ETH were up yesterday, I think primarily on amazing CPI numbers. I mean, again, the street wanted 3.8, we came in at 3.5. The entire street expectations were 3.8 to 3.9. We came in significantly below that. You know, when you come in at 3.5 on an inflation report that's expecting 3.8, that's enough for the street to be like, oh, we got it wrong, but we got it wrong in such a good way that we should really recalculate where our expectations are. And oil did go down a lot in the month of June, and hopefully it, you know, continues to stay down in the month of July, although we've had this little spike up. But maybe that's enough to start changing the narrative. All right, so that's what we got on oil. We will get back into, and inflation, we'll get back into some of those numbers, but let's get into the AI updates for what we have right now. So first of all, let's just do Asml real quick because they absolutely demolished earnings. Asml right there is up about 3.6% in the pre-market. What did they do? So these results were pretty damn good. And I think these results are highlighting how important the lithography business continues to be and how much of a monopoly essentially Asml has in a meaningful way. Wouldn't inflation be bullish Bitcoin? I think 2 years ago, everyone would say inflation is bullish Bitcoin and inflation is gold. But 2 years later, I feel like inflation has turned into a bad thing because gold and Bitcoin are risk-on assets, which is why in 2022 Bitcoin bottomed because we raised rates so much that now, you know, gold, Bitcoin, silver, Ethereum, they all need a risk-on environment, which means lower rates, which means less inflation, you know, to be able to go higher. So theoretically, it was supposed to be an inflation hedge. Same with gold, but that's not how it's playing out. Net sales 9.3 billion versus 8.85 on ASML. That's a beat. EPS 759 versus 690. That's a beat. Gross margins 54% versus 52%. That is a beat. They also are basically sold out for 2027 already. They are guiding to 12 billion versus 10.2 billion for next quarter. That's a pretty big beat. Gross margins, instead of 52.5, they are guiding to 57. That's a 5% difference. R&D costs 1.2 billion as well. So from the perspective of what the company said, some commentary right here. The end market demand has motivated our customers to increase their capex, but also accelerate all their plans. Customers are providing longer than usual visibility with very strong order bookings through H1 2026, very similar to what Micron said as well. We are pretty much already close to receive all the EUV orders we need for 2027. The CFO says the updated guidance includes expected demand from Elon Musk's Terafab project. ASML says it expects to collaborate with Musk and the team on the initiative, and the industry will need major innovation to address AI power consumption and cost, with more critical lithography exposures expected for advanced logic and memory. That just means a lot more capex is likely necessary to be able to get this show on the road, given the demand is there going into the next 2 years. So I know the stock is not up that much right now, and that's because the stock year to date, if we take a look at it, is up 52%. So probably going to be hard for this thing to, you know, get up another 10, 20% after it's up that much already. But still, if you are an ASML shareholder, or if you're just a observant of what the AI trade is doing and how long that AI trade can continue holding on to its momentum, I know there's been a lot of weakness in the sentiment of that trade. You know, when a company like ASML, AEHR, when they put up the numbers that they need to put up, and they're doing it in a way that's, you know, just proving that this show is not stopping, it does, I think, restore at least a little bit more excitement in terms of how the market is navigating the broader AI trade. Nebius, they just introduced an asset-light AI cloud model through infrastructure partnerships. Partners will finance, own, and operate the data centers and hardware, while Nebius provides the architecture, software stack, supply chain access, and sells the capacity through its own sales team. This came out this morning. Nebius expects revenue sharing, licensing fees, commissions, and committed capacity agreements with minimal incremental capital required. I thought this partnership was actually really interesting for Nebius. It's part of the reason why they are one of the I would say stronger neoclouds out there, simply because of the diversification of their model, but also because they are trying to own the entire software stack, not just the bare metals of building a data center. So these asset-light AI cloud models is very similar to, you know, AWS, GCP, and Azure. They obviously spend a lot on CapEx, but at the end of the day, their gross margins continue to be so strong because they're selling more services, not just the actual physical location of their hardware for the data centers. And it feels like that's what Nebius is trying to transition for. Because, you know, Roman has, and Arcadia have said this multiple times, they want to become the next hyperscaler cloud. They don't want to just serve the hyperscaler clouds that are out there. So I thought that was really not only interesting, but I thought it was important for them to come out with this type of announcement. That's up 3% right there. It fell 7% yesterday, 220 to 194. And I would imagine the other neo clouds are going to try to do that. It's part of the reason why I ran bought a Kubernetes platform the other day, right? They're trying to also diversify more into owning the entire software stack of the data center, not just the raw land, which I think is increasingly why Nebius trades at a premium compared to its peers. But it makes sense that Nebius ended up following in that direction. Do we have Oracle news? I don't see Oracle right there, up about 1.6%. Let's see if there is any Oracle news. Then we'll talk about Morgan Stanley because they have earnings. Also, speaking of the neoclouds, CoreWeave did something yesterday that's actually really interesting that we will talk about as well. I do not see any Oracle. No, I do. Oracle. Okay, this is not official, but reports are saying Oracle is getting a massive Japan cloud contract. We don't have the name of the company that they're working with in Japan, but that could be part of the reason why the stock is up right here in the pre-market. Rumors of a new Japanese cloud contract. Is it official? I don't see it being official on their website. No, so they didn't put out a press release on this yet, but that's what Reuters is reporting. Oracle is getting a new cloud contract with Japan. We do not have the numbers on what that cloud contract will look like. Stock's not up too much, up about 1.6. But any contracts outside of OpenAI at this point, I think, are what Oracle needs to start diversifying in a meaningful way. Yeah, the Financial Times reported that Oracle's in discussions to provide cloud infrastructure to the Japanese government. Okay, so not official yet. Oracle has not come out. The Japanese government have not come out with a joint press release, but it's definitely good to see them diversifying their backlog away from some of the foundation model companies as well. Palantir, that's up about 1%. Accelera, that's up 2.5%. They have earnings coming up soon. Asml, that is up 3%. BTC and ETH, again, doing their thing. Wow, look at Bitcoin run. 65.3. It was at 62.3 on Monday. And then ETH, maybe 2,000 in the cards today. Meta as well. That's up in the pre-market at 665 as that continues to go green. All right, before we talk about some of the interesting stuff that CoreWeave did yesterday, let's talk about PayPal. So first of all, put in the chat if you still own your PayPal shares. I think literally everyone, maybe not everyone, but a lot of people, including myself, got wrapped up into the PayPal story. I bought options on it back in like June of 23. I sold in October of 2023 for like a $5,000 loss. That ended up being a good decision because for the next 3 years, it did nothing. It actually ended up going down from there. But a lot of people thought this stock would be a $120 stock, $140 stock, because when you look at the fundamentals of it, you obviously think it's undervalued. The problem is they had a lot of management issues. They really didn't increase the volume of growth that they needed to. Their margins have been kind of and they just they've never been able to really reform the company, even though it was obviously undervalued. And you could say it was objectively undervalued, but the undervaluation was for a reason. I lost 20K on it. I lost it. I still have it. Never touched it. Well, so this was the offer last night. Stripe and Advent have reportedly offered to buy PayPal for $60.50 a share. 53 billion. The stock was at $300 back in 2021, so obviously it's a substantial discount to it. The offer is banked by roughly 50 billion in committed bank financing. Stripe and Advent would jointly own PayPal with equal stakes rather than break it up. Yes, there is a iconic video of me and Adam covering PayPal earnings where the stock went up 10% and then it went down 20%, and it all happened within 5 minutes. And someone posted it on Wall Street Bets in 2024, and I went viral. So thank you to whoever posted that, because I looked like an idiot on it. But the point is, we've all had our fling with PayPal. I don't like this deal. I think 53 billion is too cheap. Like, I understand it's been struggling. I understand leadership has been bad. I understand management has been horrible. They got rid of Alex Chris, and I think he did a good job, but ultimately he had different perspectives on what to do with the company versus what the board wanted to do. I think this thing needs to be higher than 53 billion for the level of importance that they have in the broader financial system. But the ruthless thing about capitalism is like, hey, if you don't have the leverage, which I don't think PayPal has any leverage, quite frankly. They've got a business, but they have either the stock stays flat and shareholders eventually just dump it and move on to something else, because shareholders have been extremely patient with this, or they take out an offer. I'll play the clip later. It's like a 2-minute 30 clip. I don't want to play it right now and have you guys have to watch it for 2 minutes and 30 seconds. We'll play it later, but if you just Google, or just go to my Twitter, just type in Amit is investing PayPal earnings. I post it like every year before the year. I'll probably post it this year before earnings. But the point is, 18% up right here in the pre-market is assuming the deal is going to get done. I don't know, man. There's still an arbitrage right here. The price is at $60.50 and PayPal right here is at $56.10. So there is a $4.50 arbitrage that if you buy it here and the offer goes through, you can, make a free $4.50. But I don't think the board easily wants to approve this. Now, granted, they might not have no choice and they might have to do it, but I still don't think this would be the best way for them to engage for shareholders, because I just think there's more juice you can get. I think you can at least get 75 out of this. And maybe that's being way too optimistic, but at the end of the day, that's what we're seeing right now when it comes to PayPal. So time will tell what happens on this one. If you still have it, you got to at least be happy that the stock's up 15%. Maybe even start selling today to take some of your profits. But if not, then unfortunately, we're going to see how that stock continues to react. Dude, you guys have seen it already. Why do you guys want me to play the video so badly? You guys, most of you guys have you guys not seen this video? Michael Burry also just commented. He said, yeah, so Burry also says $60.50 is simply too low. I agree with Burry. This is too low. I think it's way, way too freaking low for him to be able to make the argument that $60.50 is what makes sense. Okay, fine. I will play it. I will freaking play it. It's 2 minutes though. So you're going to have to be here for 2 minutes. It's a little blurry because I can't find the actual video with the clearness of it, but it's a little loud as well. Okay, so just be ready. It's 2 minutes, 2024, a young Amit that wanted PayPal to go up.
No, 3%.
Holy crap. Holy crap.
It's popping.
Holy crap.
4%. 5%.
Holy crap. Holy crap. Holy crap. 6%.
6%.
Holy crap. We broke it. Oh, it's 67. I'm trying to get the numbers.
7.5%.
Let's fucking go.
No, that green candle is going to go pop up right now, bro. 8.5%. 8.5%.
What did they announce?
9%.
I'm trying to get this great.
You can tell why Wall Street Bets was all over this and was like, look at these two dumbasses before an earnings.
They had to announce something, dude.
9.3%.
10%.
9.5%. 10%.
10%.
10%.
Okay, so we got Andrew. They beat revenue by about 40 million. Okay, so we got that number. Okay, here we go. They beat EPS by about 15 cents. I got it. They beat revenue by about 130 million. So there you go. You got to beat on the EPS and you got to beat on the revenue. You got to beat on the EPS. You got to beat on the revenue. And then the guidance numbers should be coming in very soon. And then the street will be able to react to that as well. Oh, we got to ring the bell for this, Adam.
Bro, it's going back down. Now it's even. People are not liking it. Now it's down. 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 What the fuck? Down 5%?
How the fuck is this happening?
Bro, I have no idea.
You know the Joker? You know the Joker in The Dark Knight where he just starts laughing and then Batman keeps punching him and he keeps punching him and he just keeps laughing because all you can do is laugh?
Bro.
Okay.
Well, that was the clip. The funniest part is when I'm like, Adam, we got to ring the bell. And then Adam is like fake ringing the bell, but he's also seeing this. I didn't see the stock go down 5% in that candle. So he's ringing the bell, but he's like concerned because he's like, oh, we shouldn't be ringing the bell because the stock's going down. So yeah, that was the PayPal clip. But the point is, we've all had a history with this stupid stock. And unfortunately, the stock hasn't been able to move, but at least 19% up in the pre-market. So for people that want to potentially break even, that's the worst thing. I think a lot of people aren't even breaking even on this offer. So like, I don't think this offer is going to be accepted as easily because people, at least want to make some money on it. And as of now, they're not being able to break even because so many people bought at above that $60 range. All right, Buffett, he did an interview today, said a bunch of different things. And apparently Warren Buffett was the architect of the Google investment at Berkshire.
I've read a great deal since January 1st in terms of what happened with Bill and Epstein. And
Oh, that's the Bill Gates clip. Let me play the Google clip, and we'll watch the Bill Gates clip.
I initiated it. But, I mean, I normally wouldn't give you an answer on something like that, but I will because I am not doing anything that he doesn't approve of. He's not doing anything I don't approve of. We talk all the time. He's well, every day. I mean, but he is the decider.
And then this is him talking about why he's not giving the Gates Foundation any more stock.
With Bill and Epstein. And I've read his remarks to Congress given under oath. And I've read cross-examination. And while it's distasteful, and while he made mistakes, I made mistakes in hiring all kinds of people or choosing friends and then finding out later that one way or another they weren't what I thought they were. And so I found nothing in there that was beyond what I could see. I could picture myself.
So Buffett is not giving any more money to the Gates Foundation. I think he gave away about 8 billion shares worth of stock yesterday. And then he talked about initiating the Google position. Now, I watched the full interview this morning, and Becky tried really asking him, like, why did you buy Google? And he didn't have an answer, to be honest. Like, it was kind of like you're trying to like figure out, hey, like, do you like their cloud revenues? Do you think they're going to become a leader in AI? And Buffett could not give an answer. He really, everyone can watch it for themselves, but he could not explain why they actually bought Google. Like with Apple, he could explain it's a consumer hardware device. That's why we bought it. I think with Google, quite frankly, they probably just looked at the financials and they were like, we need to own some type of tech because tech is the only reason that we beat the S&P 500 over the past 10 years. Maybe Amazon's a little bit too tricky. Meta, maybe we don't like Zuckerberg. Google is something that from a blue chip perspective is stable enough for us to be able to buy. So although he's saying he initiated the decision, the reason that clip was 20 seconds and you didn't get any more context is because there is no context, because in that entire interview, he did not give an actual reason for why they ended up buying Google. So to me, it was probably another bunch of quants at Berkshire that probably thought Google is going to be a good bet. And, Buffett gave them the okay. And then there you go. That's how Berkshire ends up buying Google. Here's what he had to say about the state of the markets as well.
As you know, Warren Buffett has made a practice of not making calls on where he thinks the market is heading, but he does have a pretty unique view into consumer and enterprise behavior. And I asked him if the markets right now make sense to him.
I think there are times when opportunities are just thrown at you so fast you can't, it's unbelievable. And then there's other times when you're very, very lucky if you find one thing in a couple of years, and it should always be that the latter is what prevails. But since humans love to gamble so much, there's more money in actually cultivating gamblers than there are cultivating investors. If somebody bought Berkshire 40 years, 50 years ago, a guy would have made one commission, and he should spend the rest of his time telling the client don't do anything with it. And that's just not the way. We can't expect that of humans. But every now and then you do find people you find people who behave far better than other people.
Fair to say, though, it's tougher to find values or find
it's
cheap
tough to find
opportunities?
values when everybody is preferring gambling. Yeah. And from the standpoint of the state, we may have discussed this, but from the standpoint of the state, it's sort of disgusting because the state needs money for all kinds of things, roads, schools, you name it. And they have found that they can clip people who are buying nothing but hope, selling them something with a payout ratio of 60% or something like that. And if they weren't doing that, they'd have to have the income tax higher. Right. It's a cynical sort of activity. And I think the less you get cynicism between the governing body and the people of government, you don't want people to be cynical about their system.
So Buffett's saying two things right there. Number one, he's saying that the United States is in extreme debt, and we are going to have to do a lot of creative things to be able to resolve that debt, which is not a good thing for any nation of people when they're stuck in a ton of debt and, economic mobility is not happening at a rate that is acceptable for all members of a nation. 10-year, by the way, just down a little bit on the day, but still pretty high at 4.569%. The other thing he's mentioning is that people are gambling, right? His argument is that there's not really value to be found. Buffett is, one of the architects of value investing, but that people are just gambling on names that they think are going to go higher. And, you could have said that for the past 10 years. I'm sure Buffett was not a fan of all these different stocks that have done very well over the past 10 years that have real fundamental business models. But yeah, it was a little bit of a gamble to bet on Uber when they were burning billions of dollars a month. But that gamble has, worked out if you saw the world in a particular way. So, I mean, from his perspective, obviously Berkshire has $400 billion of cash and they are not easily deploying that cash because they feel that markets are uneasy right now. But time will tell to see how uneasy those markets become. Part of the reason I think markets continue to be uneasy is because of this Iran conflict. So at 6 a.m. today, U.S. Sent Command forces began launching a wave of strikes against Iran. The strikes are designed to further degrade military capabilities of the Iranian forces and have been used to attack commercial shipping in the Strait of Hormuz. Axios reported yesterday that Trump had a meeting in the Situation Room on Tuesday to discuss a massive offensive. The offense will include strikes that are wider in scope than the current strikes around the Strait of Hormuz. Trump was joined in the Situation Room by J.D. Vance, Marco Rubio, Pete Hegseth. By the way, I think J.D. Vance is going to be on Joe Rogan because there was video footage of his security detail leaving with him from Rogan's studio in Austin. So we might see Vance on Rogan soon. The meeting reportedly focused on new plans for devastating strikes on strategic targets in Iran. And then Trump said yesterday that if Iran doesn't come to the negotiating table, it's going to get worse.
Do you anticipate that the strikes we're seeing this week against Iran will expand? Are you considering hitting energy targets or other locations inside of Iran?
I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them because next week comes the power plants. Next week comes the bridges. We're going to knock out all their power plants. We're going to knock out all their bridges unless they get to the table and negotiate.
And then here's what Trump said about the fee that he's charging.
How would you describe what is happening at this moment? Has the war resumed?
Well, I guess you could define it any way you want, but certainly we're beating them up really badly. They have to be beat up. We're hitting them very, very hard. We're hitting every single thing that they have along the shore, along the waterfront. If you look at the Strait of Hormuz, it's now, we're finding it hard to find where they have anything. We have to stop it. We have to keep it open. I was going to charge a fee, but instead they'd rather spend a lot of money in the United States, which frankly is better because I don't like the idea of a fee. It's got to remain free because otherwise others will do the same thing. But I think we've made tremendous progress.
How would you describe what is happening?
And then here's what he said about not opening the strait for Iran.
It's open if people want to go through it. We're not opening it for Iran. That's the only one it's closed for. It's closed for Iran, both in and out, but it's open now. A lot of things have happened, Trey, in the last few months. Pipelines are being built. We're coming up with great alternatives, including Texas, including Alaska.
So he's talking there about the naval blockade, which I know people are still confused about in terms of what does it mean for that to be open and for that to let certain ships go through besides Iran. But I think the market also is a bit confused. I think the market is starting to assume that this is going to last longer than expected, but eventually there's going to have to be some resolution as oil ticks just below 80 right here. It was at 81 yesterday before we got that CPI report around how Iran and Trump are going to go back and forth. And, yesterday the 20% cargo tariff went away because, he's creating these deals with Gulf states. I mean, again, if we are really getting a ton of investment from Saudi Arabia and Kuwait and Bahrain because Trump threatened to put a 20% cargo fee on them, then by all means, it was a good form of negotiating. But I think people are assuming that, Trump did an amazing job putting this 20% cargo fee and then taking it off less than 24 hours later because he scared the living crap out of all of these Middle Eastern nations that are now going to invest so much into the United States. Like, we don't know if they're actually going to invest. We don't know if Trump is just saying that as a way to be able to justify why he's getting rid of the 20% cargo fee. And we don't even know if, the Middle Eastern nations even knew that this was a possibility for something that would have to happen, especially when instead of paying the 20% cargo fee, they could have just taken the Iran route and paid a 2% fee. So I do think there's a lot of optimism around how we're going to get all these investments pouring into the country, because in less than 24 hours, Trump somehow threatened all the Middle East. I mean, it took him at least 3 months to threaten Japan and South Korea and a variety of other nations last year to take off the reciprocal tariffs. You're telling me in less than 24 hours, Kuwait was like, yeah, we're going to put tens of billions of dollars into the United States to not pay this 20% cargo fee. Like, it's so weird when theoretically it's possible. And if that's how it played out, then yeah, that's a hell of a deal that Trump made in less than a day, and it makes sense, and it's going to bring a lot more investment into the country. But it's also like, did that really happen, or did that not? And so I feel like we at least need to give it some weeks and see, what that turns out to manifest to. But until then, the markets are just like, all right, if we're going to continue escalating, then oil will continue staying in that $80 range, as we're just above 80 right now. By the way, speaking of Trump, the U.S. Treasury 15 minutes ago just made an announcement that the U.S. Mint is beginning production of a new $1 gold coin featuring President Trump. I thought it was going to be a $250 bill with Trump. It seems like now it's a gold. This is from the U.S. Treasury itself right here. Scott Bessent on Wednesday unveiled new photos of proposed $1 gold coins for Trump to commemorate America's 250th anniversary. All right, there you go. That's what we got. So we'll all soon be able to get that dollar gold coin from Mr. Donnie T. But outside of that, the Iran situation continues to be weird. I don't think it's as aggressive as some people are saying, because if it was, I feel like oil will be spiking back to the highs that it was at a few weeks ago. So the fact that it's actually tame at around 75 to 82 is like somewhat encouraging. And, earnings are still going up, which is why the market is able to do what it's doing. But, if this continues, I don't see how oil doesn't continue spiking up. And then, yeah, we got a good CPI and good PPI. For those that are just joining, PPI came in way better than expected. CPI was way better than expected yesterday. But, how long can we continue to depend on these numbers if oil spikes up? And then what does the Fed do when they think about where monetary policy goes? One thing that Kevin Warsh was very clear about yesterday, he is not tolerating 2% inflation. I mean, he made it very clear that the Fed is absolutely committed to get 2%, to get back to that 2% target. So they don't want anything above 2%, which isn't a commitment to like hiking, but it's definitely not a commitment to quantitative easing or cutting. And you would imagine that if we cut, it's going to be really hard to get back to 2% easily until there's enough data to determine that we're very close to 2%. And, that data is not necessarily there yet. And if oil keeps going up, that data is definitely not going to be there. But if we hike, there's a chance to get down to 2%, but it's going to slow business activity, and it's not going to hurt, or it's going to hurt the economy, and it's obviously going to affect the labor market. So I think Kevin Warsh is in a little bit of a tough spot right there. That's why he's coming up with all these task forces, but he is very committed on getting inflation down. And, time will tell to see how aggressively he's going to take that motive to actually get inflation to come down. Air Test Systems, by the way, 34%. Again, they crushed earnings yesterday, increased guidance, beat on EPS, beat on revenue. Hopefully it's going to make all the photonics names remember how strong they were, or at least remind the market how strong they were in terms of their earnings. Lumentum right there, down in the pre-market, but was up 6% yesterday. Coherent as well is up about 1%. Torshi, thank you for the super chat. Can you talk about the CoreWeave thing you mentioned? I can, and thank you for the super chat for reminding me, because I forgot about it as I got into that whole PayPal video that you guys wanted to see. So let's get into this CoreWeave thing. Okay, this is interesting. It's bearish memory, kind of, but it's also not, because it's what a company like CoreWeave should be doing when you have $99 billion of backlog. So basically, there are reports out there that CoreWeave is exploring financial derivatives to hedge memory chip price risk. The company is evaluating put options or other derivative instruments. Long-term supply deals guarantee memory suppliers a price floor. Falling chip prices for memory could leave CoreWeave paying above market contract prices, which would be horrible for their margins. And CoreWeave already has supply agreements with firms like Micron and SanDisk. Memory and flash storage prices have risen sharply amid AI infrastructure demand. The strategy mirrors commodity hedging used in industries like energy and airlines. So it's not that big of a deal because, you know, there's so many industries where you have massive levels of commodity risk based on how the pricing goes up and down that ultimately determines the basis for how a company needs to hedge all their exposure, especially if they're, you know, McDonald's does this with a variety of poultry futures that they have to hedge in terms of the price of beef, eggs, etc. for their products. But the fact that CoreWeave is even thinking of this to me is interesting because, you know, the smart people at CoreWeave are like, we don't know if these memory prices can stay as high as they do. And if they do decline sharply, you know, we have to pay not only a lot for memory, but we have to pay a lot for the entire data center stack. So we should probably have some options, some puts to hedge on the downside, because if we still have to lock in, pay these prices, like if there's massive oversupply by Q2 2028, which Bloomberg did report last week is possible. Maybe it's not possible. You know, time will tell, but that's the whole point of hedging. If it does happen and you're locked into these prices and you could get it cheaper by going to a different supplier or having or renegotiating an agreement, but you can't because you're locked in, well, you need some downside protection. And that's where the puts might potentially come in. So I would imagine if CoreWeave's thinking of this, then all the other neoclouds that are locked into long-term memory agreements, even the hyperscalers might be thinking of this as well, even though the hyperscalers have better negotiating leverage with the memory names. Nebius right there, that's up about 2% on the new deal they announced today. Asml up 3% on earnings. But one thing that makes sense for CoreWeave to think about as well. Dan Ives, he left Wedbush. He is starting a new tech-focused platform called Yorkville Securities. He's partnering with Yorkville Bank to offer an integrated platform for companies and investors navigating major market tech transformation, research, capital, and deal flow under one roof. The venture combines Yorkville's principal investing and deal-making with Ives' globally followed tech research. Okay, so I think he's launching a bank and an AI research firm within the bank. They're joining forces to form Yorkville, Ives & Co., a modern merchant bank built for the next era of innovation and capital formation. Okay, there you go. Mr. Dan Ives, I'm sure he'll still be putting out his research and all this stuff. It'll just be under his own institution now instead of Wedbush. And that's what you got for Dan Ives. Nebius right there, up 1%. PayPal with that acquisition offer, that's up 16%. Robinhood, the was stuck at 108 on Monday. Look at her go. 115 right here in the pre-market. Let's see today if we can get a proper green day. Yesterday, the IBM news kind of messed up software. You had the neoclouds randomly fall in the middle of the day. SK Hynix did really well, but then some of the other memory names didn't cooperate. TSM has earnings tomorrow. ASML, again, they crushed it. Someone asked, why isn't ASML taking up all the semis? I think you're going to need more results from the semis to really get everything to be uplifted. ASML is just not going to be enough. So I think we got to give it a couple weeks. But if we have more companies put up results like ASML, then maybe that will help. And then Bitcoin and ETH finally catching a bid for the first time in about a month. So I feel like we got a recipe here today to have some fun, but we got to see if the market can maintain that momentum. All right, here we go. Wednesday, July 15th. Thank you, everybody, for being here. The stock market is now open. All right, wake your asses up. Let's get in it. Wow, Robinhood, 116 on the open. That's a pretty big move right there, considering this thing was going almost below 108 on Monday. So not too bad. 115.74, that's up 2%. Lumentum, that is up on AEHR, crushing those results. Air Test Systems, 38%. Goodness gracious. I mean, I think people were bullish, but I don't know if people were this bullish. That is a hell of a move right there on Air Test Systems as that continues to go higher. Robinhood is just not stopping. Robinhood is just not stopping right there. Air Test Systems passes 100. That's up 41%. Zeta gets a little bit of love. That's up 23%, 3% up on the day. BMNR up 3% after being up 11% yesterday. Accelera, that's up 2%. Palantir, 136.62. Okay, Palantir is having some fun as well right now. ServiceNow, that's up 2%. That was stuck at 102 yesterday. Nokia, that's up 1%. Rocket Lab up 2%. Rocket Lab also closed yesterday below 70. Tesla, that's up 1.3%. SpaceX up 1.3%. Is SoFi up? SoFi is 1890. That is also up. You are seeing a lot of these names start to get a move today as the broader market in general is flipping a bit more green right here. Qualcomm, that is also green. IGV, that's up 1.6. Bloom is flat on the day. Intel's also flat. So even the names that are down are not down that much. Micron and SanDisk end up being some of the only red names I'm seeing right now. Wow. Micron down 2, SanDisk down, how much? SanDisk down 4. Lucid, there was rumors that they would go bankrupt yesterday. The CEO came out and said those rumors are not true. So, like, yeah, unfortunately, you had Lucid, go down 50% for those that owned it, but CEO came out and said we're not actually going bankrupt and they're starting to recover. But yeah, that was kind of what happened yesterday. The semis, are we going down? CoreWeave is red. Nebius is losing 200, but not red. ASML, that's up 2. So ASML losing a decent chunk of its momentum from the pre-market, but we're still green. Meta doing okay, 663. That is not horrible. The space names are also okay. Redwire right there is at $10.22. You have Hood at 115.76. PayPal at 53.81. That's up 13%. Nokia, that is up 0.5%. You are seeing some red candles come in, though. You are definitely seeing some of those red candles now come in right here as we're starting to see this push. Oracle, can we get some green? Oracle up 2.6. Oracle's trying, but still in this 130 range. Robinhood trying to get back above 116. Wix right there, that's up a little bit. Palantir up 1.9. TSM, that's up 1.68%. The SaaS names definitely are having some fun today. Zeta's up 3. Semis are up except Marvell, Dell, Micron, ON, and Intel. In terms of SaaS, I feel like all of them are up. Yeah, literally all of them. Oracle, CRM, Cloudflare, CrowdStrike, which had a massive day yesterday. The cybersecurity names based on what IBM said. That's up another 2.8%. Zscaler, that's up 2%. Snowflake, that's up 1%. Datadog, that's up 0.5% as well. How about IBM, which took a 27% hit yesterday? IBM up 2.5%, so that's up 22%. Holding on as well. Nebius 201 back above 200. Robinhood finally goes positive year to date. It's been a long year for Hood. You had to deal with a 50% drawdown, but we are finally up 1% year to date as Hoodie is trying to go for it here. SoFi 1870, Micron again still down 2. Why are the semis gone? You know, the semi sentiment has been bad for the past week and a half, really for the past month. ASML, the fact that that's going red is a little concerning here, but I don't know, because then you have Air Test Systems, and I know it's a smaller company, but they're still in the broader semi ecosystem. That's up 42%. So you would think that this would get a little bit more juice right here, but it's not. Yeah, I mean, I think that consolidation around semis is probably what July is for. And maybe that's why we're not seeing a massive move right there. IREM, that's up 3.3 as well. How about Corning? Is that down? Yeah, Corning goes down 3%. That's a little ugly. Marvell, down 3%. That's a little ugly. Celestica, that just went red, down 1%. How about NVIDIA? We didn't even look at NVIDIA. NVIDIA is up. Okay, so NVIDIA is actually holding the semis down, or sorry, holding the semis up to an extent. 213.50. I mean, NVIDIA was 190 on Monday, right? So NVIDIA's had a hell of a move in the past 2 days, but the rest of the semis not really. AMD's also doing okay, 555. What about Tesla? EOSC, Tesla 404, that goes up. EOSC just put out preliminary results. Is that up? That stock is up 7%, $69 million for Q2 revenue. Backlog is also now a new record, $807 million, up 25% quarter over quarter with $364 million in cash. So EOSC, the stock fell 50% a few months ago on missing guidance. Looks like they are getting some of their things in order right here. I think it was at 650 a couple weeks ago as well, then took a hit, but now 461, that's up 7.5% as that one's getting a move. Broadcom is green, TSM is green, NVIDIA green. So large cap semis are holding on to their momentum. Tesla as well, flipping green, 404. But these other names are struggling a bit more. Robinhood looks like it wants to go for 117. Really looks like it's trying for it. We got to see if we can get there, but we're at 116.25 right there. The momentum is pretty strong. How about Amazon? Amazon is up 251. Okay. Google, can we break 355? Google 362. Oh, the hyperscalers are loving it. Meta's flat, so Meta's the only one that's down out of them. Okay, so Meta's the only one that's red. Amazon's up, Nvidia's up, Tesla's up, Google's up, and Microsoft is up along with Apple right there. Big Bear AI, the headline on that is they're expanding their mission-ready generative AI platform for the Department of War, adding air-gapped hardware and a new platform expansion with a bring-your-own-model delivery mechanism with customers choosing managed models or third-party model agreements, aka, once again, showing that they don't need to have a specific LLM. It can be agnostic towards whatever LLM is useful. Big Bear AI, that stock is up 4. Are we hitting Apple all-time highs? We are indeed hitting Apple all-time highs right there. Wow, 39. No, we had 323 yesterday, so not officially all-time highs. But again, Apple doesn't spend on CapEx, which is, what the street cares about. They do not want massive amounts of CapEx in order to help free cash flow. Robinhood 115.85, Amazon 250.240. Amazon really taking off right here. And then AEHR, I think having the best day, right? Having the absolute best day right there, 108.42, as that is up 50%, dude. Goodness gracious. Did NVIDIA just go red? Oh my goodness, NVIDIA just went red. What is that, dude? 214 to 211.72 in what, 5 seconds? Really? Really, NVIDIA? I hope that's not a headwind for a lot of these other stocks right here. Tesla 404, Broadcom 395, Robinhood trying to hold on to the 115s. BM&R going down is also a little weird right now. 1650 on Mr. BM&R. That's down 1.3, or that's up 1.3, but it's getting a red candle from that $17 range as you're seeing it get hit. Amazon 252, Tesla 404. All right, so some of that momentum now starting to fade. You got Hoodie with an ugly red candle as well. 115 all the way down to 114.80. Let's see if that can at least rebound up to the 115s. Feels like there is momentum there. I don't know if that easily goes back down to 112 like it was stuck at yesterday. Google at least doing well, 364. As that continues to go up. The pre-market was so fake. That's the story of this entire week, right? The pre-market has been so fake in so many different ways. And, it just hasn't really changed. Tesla right there, 404. PayPal. So again, the PayPal offer that came out yesterday night was for $60.50 from Stripe. $50 billion or $53 billion, 54.63 right there on PayPal. So the market obviously doesn't fully believe that that is actually going to go through. I mean, you do have a lot of your DAO components that are green, a lot of your software names that are green. It's the semi names that are struggling the most right here. The space names are actually, holding on as well. Rocket Lab, well, never mind. Rocket Lab was 80, now it's at 79. The space names are not easily holding on either right here. NVIDIA 211, Air Test Systems 108, Apple 319. Why is Nokia dumping? I do not know. That's down about 1.5%. It was actually pushing $12 yesterday, $12.50. The annoying thing about this is it definitely is signaling that good earnings are not enough. And that has been the fear, right? With Palantir, NVIDIA, they've had really good quarters. Stocks haven't been able to move. So if that happens as an entire market where we just end up flat because stocks aren't able to really get a move right here, that would be annoying, but it is what it is if that's how this ends up playing out for Q2. HIMS right there, 36.43. That's up 3.64% as well. Robinhood now really losing it. She's trying to hold 114. She is trying. SpaceX, that's up 1.63%. Air Test Systems, again, still moving. And then Bitcoin is also holding on. So Bitcoin, Air Test Systems, and a few of these software names are the ones that are showing some love. Fastly's down, Poet down, AAOI. Why is that down if Air Test Systems is? That should not be happening. That's weird. Air Test Systems up 40%, 45%. You would think the photonics and Corning as well is in the optics space. That should get a bid. Marvell down 3. Marvell now back to 215. Morgan Stanley right there. They had a good earnings. That one goes down. Duolingo is up today. Yeah, another software name that's getting most love. Robinhood just getting decimated, dude. They took her to 116. They took her right back down to 113.73. HIMS right there. That's up about 3.81%. And PayPal is at 54.19. Adobe's up. That's nice. At least you got Adobe. That's up 2.5%. Oracle lost the majority of the bounce. It's one of those days, right? You thought you had the recipe for a lot of stuff going in your favor, and at least on the semi side, the freaking software names just holding on, but Micron and SpaceX getting hit. BlackRock, I think they had earnings today, right? Yeah, they did actually. We didn't cover that. Let me pull up their numbers. That's up 7%. So the market rotating a little bit more into the financials here as well over some of the semis. BlackRock, they beat by 10% on EPS. EPS was up 15% year over year. Revenue was up 31% year over year. Wow. 7 billion versus 6.8 billion expected. I mean, that is unbelievable. 31% growth for a financial institution, but that's why that stock is up 6%. SoFi doesn't mean they're rotating into financials. The problem with SoFi is that it's not seen as like a financial, as weird as that is to say, even though when you compare it to the tech stocks, it is seen as a financial. So it just sits in a weird position. But yeah, technically they are not rotating really to the financials when it comes to SoFi. But Bank of America hit 52-week highs yesterday. So did JP Morgan. XLF right there, 56.30. I mean, JP Morgan is likely going to be the first $1 trillion bank. It's at $937 billion, up another 2% today. So I think this year we could see that, get to $1 trillion. Oscar's down 2%. Yeah, pre-market was a head fake, folks. Absolute head fake. Rocket Lab 78.70. That goes flat. Micron gets hit pretty hard. Where's SK Hynix? 5% down after being up 24% yesterday. Okay, so that's how the market decided to open up here today, as many of these names selling off. Baba getting some love. China's getting some love. Software is getting some love. Hyperscalers are getting some love. The rest of these names, not really. At least not in a meaningful amount. Tesla right there, 402 as well. Copen, that's up 12%. So you got some of the small caps getting some moves right here. HIMS making some momentum. AMD 553. AMD is 1% away from going red. NVIDIA also 28 cents away from going red. Yeah, that is interesting. Especially on a day with really good earnings with ASML. As ASML now flips red. All right, so Netflix is tomorrow. They're going to have to prove that they've got a decent stack of earnings that they can show to the world. 73.52 right there on Mr. Netflix. And if they don't, it just once again proves to the market that there are more fears around what's going on with. Well, the thing is, if the earnings picture is good, the fears I feel like more have to do with valuation and exuberance more than the fundamentals of these companies, because you're seeing Broadcom, you're seeing TSM, you're seeing a lot of these large cap semis still hold on to a decent chunk of their momentum. Broadcom right there, that's up 2% as well. Yeah, Robinhood going red is surprising. That's actually, it's not that surprising because it's been stuck in a range, but you would think that pump would at least have some juice associated with it. But unfortunately, it's just going right back down. SanDisk down a full 5 here. SanDisk down a full 5 right now. Why is Reddit getting hit? That is a fair question. Why is it getting hit? 191 right here. This was actually up yesterday, so I don't know. I feel like, is Shopify also getting hit? Yeah, Shopify is also getting, or hold on, is Palantir? Palantir just flipped red. Okay. Are we in for a day where everything's going down? SAS is starting to flip red. Snowflake, red. Palantir, red. Datadog, red. Intuit, red. Twilio, red. CoreWeave, really red. We might be flipping into a little uglier of a day. I don't even know why. PPI was fine. Asml was fine. Is it the Iran situation? Because, I mean, Kospi, South Korea, they were up 6% last night. 6.2%. I mean, the exchanges had to halt trading in South Korea on the way up because it went up so quickly. So if we end up going red today, that 6% probably could get erased pretty easily in South Korea, as Shopify right there flips down about 2.5. Nabesis, that one gets crushed right there, 197 going down as well. Yeah, I don't know. Today's a weird open, but it also isn't that weird given what we've seen over the past few weeks right now. Larry Fink is live. Let's see what he's saying about BlackRock and the broader economy as well.
Let's step back for a second. If you invested in 2010, and I don't think 2010 is that long ago. I mean, it seems, for me, a couple of days ago. but the S&P's up 6x. Okay, put it in perspective. In 2010, BlackRock only had $3 trillion in assets. Now we're 15.3. I mean, from every corridor, from everything I look at, if we could get more and more people focusing on the long term, if we could get more countries focusing on helping young people invest, creating their own accounts for young people, over time, they're going to be far better off than in a bank account. They understand the virtues and the value of long-term investing. And I think we're going to be better off. I mean, I truly believe if we, in 2004, there was a large push towards changing Social Security, and it was shut down. I do believe it's time for us to reevaluate the virtues of Social Security and focus on the opportunities and to invest in things like these long-term plans like the Australian superannuation funds.
All right, so we'll go back to that, but not really seeing any momentum flip right here. This is an ugly open. This is an ugly open on every area, especially because we had really good news from the macro and the earnings side. And we just opened ugly. Now, it's not ugly for every company, but you're starting to see a lot of, even Air Test Systems, it was up 50. Now it's only up 40. Up 40 is still amazing, but that 10%, if that starts to slide, that one's going to head red. SpaceX right there struggling to even hold on to 137. Nebius, something's happening with this stock. The street sentiment is changing on the neoclouds, or people feel like dilution's about to come, because this has just lost all levels of momentum. And, momentum goes up, momentum goes down. So it's very possible that it's just in a momentum-driven drawdown right now. But it's obviously really getting hit right here. Rocket Lab also getting kind of crushed. Getting crushed pretty badly. 77.74. It hit 75 yesterday, then got a bounce. Micron also, big red candle. Down 3%. The shorts are definitely winning when it comes to the neoclouds, as they have a high short float on those neoclouds. The Max 7s are doing okay. Mr. Palantir, again, this one's actually relatively flat. This is actually not too bad today. It's holding on, 133.29. It was up from 122 yesterday, but still pretty ugly. And then Nvidia going red. I think Qualcomm could pop on earnings, especially since it's going into earnings with a new low. Yeah, Qualcomm actually reminds me of what happened last time going into earnings. They were basically flat year to date. They were at 130 at the time. Now they're at 178, but they've lost the entire pump from 250. It's just, I don't know if Qualcomm gets a pump in a world in which, AI sentiment in general has just been destroyed, right? Like, do these names really get the move that they need to get the market here to be excited? Adobe's down 2, Adobe's up 2, Oracle's now losing a lot of its steam. BlackRock is the main one winning today. SoFi also getting crushed down 2. Like Nokia, Corning, Qualcomm, all these names, if ASML can't get some love, you know, do the rest of them actually get a bid here? All the insurance names are up. PGR, Progressive. Wow, why are the insurance names down? 8%, down 4.5%. Chubbs, that's down 3%. Was there insurance news today? Is Anthropic killing insurance or something? Why are the insurance names down that much? They don't go down 8, 9%. Allstate doesn't move like that. PGR at earnings. Oh, they must have had horrible earnings then for the rest of the names to be getting hit, right? Let's pull up their numbers. Yeah, that is surprising. Johnson & Johnson, by the way, they also had earnings. They beat on EPS by 2%, 290 versus 285, 25.3 versus 25.0 billion on revenue. Revenue's up 7%, EPS is up 5%. J&J stock is flat today. So Johnson & Johnson, nothing too crazy. The insurance company margins compressed. PJR, so they beat on EPS. They beat on revenue. Actually, they missed on revenue. Yeah, you're right. Margins did compress. That seems to be the reason why the street's upset right here on Progressive. And obviously, that's affecting all of the other margins decrease year over year, as that's affecting Chubb, Allstate, all those guys. Rocket Lab now down 1.81%. PayPal is now only up 13, which means the market right here is saying we don't think that offer is good enough because there is a pretty big arbitrage between the acquisition price and the current price of the stock. The market's calling a little bit of BS on the actual potential of the deal. Reddit right there, still down 5. Robinhood continues to get crushed. Nvidia now losing 210. Interesting. Very interesting open here today. CleanSpark had a big deal yesterday. CleanSpark is up about 4. A lot of the watch list, though, fully going red. Figma, that one is getting hit. Keel, that's hit. Amcor, that's down 2. Cerebras, 215 to 197. MP Materials down 1.3. Goldman Sachs at least kind of holding up. GameStop's up. eBay's up a little bit. The rest of these names are down. Zeta, are we about to go red? We are about to go red on Zeta. Yeah, so it's not just the software rotation here anymore. It's everything. First Solar, are they down? First Solar, that's up a little bit. The solar names have had a bit more momentum given some of the headlines that have come out. What about T1? T1 is down. SPY is up. All right, so in the midst of all this high beta going down, let's pull up the heat map. The market's holding up. What's holding up the market? You've got, you've got financials. That's one thing that's definitely holding up the market. You've got the big tech names, which is easily part of the reason why the market's doing okay. China doing all right. So your international stocks are okay. Some of your consumer durables are holding up. And then some of the software names holding up. Yeah, Apple, Google, Microsoft, Amazon. I mean, that is already, what, 25% of the S&P. So as long as those are okay, then that's going to be all right. Google right there, 363.72, as that continues to hold on. I can't say we're too surprised by that open, right, given how it happened, but it also, on a day like today, I think was a little bit more surprising just given how much growth there was in general from a downwards PPI move and then also from a ASML earnings. Look, if we're rotating back into the Max 7, then there's still a lot of portfolios that have been waiting for that. And maybe they're gonna end up seeing some type of move like that. Sham's on Bloomberg right now. Let's go to him, see what he's saying, and then we'll
keep getting into some of these headlines.
In conflicts in Ukraine, we need to be moving capital there. If you look at the 27 budget, there's a huge amount of resource that's made available to these autonomous systems and to AI, which really, I'd say the Pentagon has actually been one of the fastest places to adopt AI in the American economy. Given the stakes, they're existential. It's a binary win-lose. Nonetheless, they've done all of that by essentially cobbling together budgets from various line items. 27 will be the first time they put a real stake in the ground, real capital that's committed to accelerate the pace-setting projects that will drive us to an entire revolution in how we fight.
So part of this is about keeping the U.S. competitive. And we saw the other week the French government actually decide to end its relationship with Palantir, in part because of a need to bolster their own domestic capabilities. And we're seeing this play out among some other European allies. Talk about this concern about being too reliant on U.S. tech. Are you concerned at all about?
Kevin Warsh will be testifying again, so the market also might just be waiting to see what he's going to say in a bit when he begins testifying. That should be in about 10 minutes.
Palantir losing a foothold in Europe, or that this could expand to other international markets that you're part of?
The product really stands for itself. I think serious people, the Germans have looked at it. They've examined the software. They know there's no backdoors in it. There's a huge part of this that really comes down to almost an economic argument of we really want to spend our money on our own companies. And I don't begrudge them that. I think the kind of vicious, underhanded campaign of lies and rumors is probably beyond the line of what's fair there. But every country should make a decision based on what's going to give them the most amount of deterrence. And clearly the U.S. has carried the load there. We have the most experience, the most reps, the most innovation stimulus here. And I think it's going to take an entire allied Western force to really confront the challenges across the axis of authoritarianism that's clearly present and creating chaos in the world.
Well, I'll keep on the international theme, if you will, because we're seeing U.S. companies start to use Chinese open source LLMs. From your view, does this pose national security risks?
Well, I think it poses, my view is that national security is not an end unto itself. It's a means to an end. And the actual end is American prosperity. And so I think it poses a threat to American prosperity. These Chinese open source models are really the result of distillation attacks. Most of this is just stolen American IP from Frontier Labs. And I think the Frontier Labs should do more to protect that IP, and that's in their own economic interest. But I'm less worried about it in the present moment because the gravest threat to us is not homicide, it's suicide. It's an inability to turn these tokens into economic value and generate American prosperity for it. You see that with the proposed moratorium in New York on data centers. Like, turning our back on AI would be as consequential a mistake as turning our back on the atom in the 70s. And we're starting to see a burgeoning, it's just the beginning, but a burgeoning US open model ecosystem forming. NVIDIA's Nemotron models are very good. I think you're going to see in the next month a slate of announcements of other American companies, non-frontier labs, sometimes called neo labs, who are putting out open weight models that companies are going to be able to cheaply fine-tune and capture their own alpha in weights they control.
In the final minute that I have you, part of the U.S.'s strategy when it comes to national security has been to have the government take equity stakes in companies that are deemed critical to national security. We know the idea has been floated when it comes to some of these frontier labs. I'm wondering what you make of this strategy. Is this the right way for the U.S. to go about it?
Well, I think it's very case dependent. I'm glad it's an option on the table. I think for some companies where they need a huge equity injection, it could make a lot of sense. For other companies, based on where they are in the mix of business they do between the commercial and government world, I'm not sure it makes as much sense, but I'm glad it's an option that's on the table. It should be a consideration.
All right, Shyam Sankar, the Palantir Chief Tech.
I think obviously Shyam is right about the open source model starting to gain more traction. You're seeing a lot more companies realize that they can save a lot more costs if they do engage in open source. But the broader question is, what implications does that have on Anthropic and OpenAI writ large right here? PayPal, that's now up 15. Zeta, that's up a half. Could we be seeing a bit of that V shape? Maybe. Rocket Lab 78.64. It's got to get all the way to 81 for this to start to really see a V. 78.56 right there. CleanSpark's up 5. ASML, that is up as well. CoreWeave still down. Warsh is not live yet. We'll flip to him when he is live. I'm not sure he's going to, again, say anything that different from what he said yesterday, but you're probably still going to have a lot more questions for him in terms of what's going on. Did Trump say something? Could we be getting those green candles because of Trump? Nope, no tweets by Trump. Although, to be honest, if the market keeps falling, maybe we do start to have Trump come back and say something. Here's some coverage on Warsh before he gets live.
Headline sending shares of PayPal sharply higher this morning, including new reporting from our David Faber. And former NEC director and current IBM vice chair, Gary Cohn, with us, his read on the economy, the market, and much more. But guys, we got a PPI report and we had CPI yesterday. And so inflation is top of mind as we await Kevin Warsh, the Fed chairman, on Capitol Hill day 2. He really did not say much yesterday, as we expected, right? The guy does not want to give forward guidance or any hint of what he's going to do. But here was the only quote that I thought was notable as far as how he's thinking about inflation and policy. He said, quote, "It's one data point." This is in regards to yesterday's CPI number, which was better than expected. It was cooler. The market took it as a release. He said, "It's one data point. The reason I created a task force on data is I do not want to overread or cherry pick data. There might be some that look at this morning's data and say, mission accomplished. Everything is swell. That is not my view." Does that mean that he wants to raise rates? Who knows? We don't know exactly what he means, but it means that he's not satisfied and that the inflation fight is not over just because there's a good data point, that he's not reading too much into it. Just that was the only notable thing. And again, it doesn't really point us one way or another on policy. As far as what we got today, more really good news. I mean, PPI, this is wholesale inflation. What's being passed on at the wholesale level, it's often seen as a precursor to consumer inflation with a negative number on it. I mean, even economists with the sharp decline in oil prices expected a 0%. We got a negative 0.3%. That was good. We also got a revision for the month before, a little bit lower as well. That was good. That was a hot month because of oil prices. Here's the problem. The year-over-year numbers, this is the monthly numbers that we just did, the negative. The year-over-year is still elevated. It's at 5.5%. And that's why the Fed's war with inflation is not over. And that's why he talks about the fact that he's serious about knocking down inflation. I'll just pair that, though, with the good news that we got on CPI, consumer prices yesterday, which was a negative 0.4 on the headline. I didn't really have time to get into it because of the testimony, but that was a lot better than expected, of the negative 0.2%. And, there was good news across the numbers. Just to give you a sense of where we are, the Fed's target's 2%, 3.5% on CPI. So, we're still above target. I think that's why Warsh is still talking tough, but it's not obvious what he's going to do about it. And we're seeing 2-year yields go lower today on the idea that maybe they don't have to hike.
Yeah, I mean, we mentioned the long bond getting to 5.11 this morning, and not a lot of relief in the 10-year. We did get mortgage apps negative again, and the 30-year fixed 6.65. That's about a 1-year high.
Yeah, so the policy is restrictive. I mean, You can argue that even with them doing nothing and him just talking tough, the market's doing the work for them. And it's good to see this trend reverse, right, in overall inflation.
It is, although Brent's back to 86, 87, something like that, right?
Right. So
20% off the lows.
Risk, right, yeah. As long as this war goes on, of course. But we have, what's being reflected in these numbers are the big decline we saw in oil prices leading into, before this latest flare-up that we got in the war. I'll just add one more because, everybody's trying to come up with alternative inflation measures now because Warsh has this data committee and he wants to rethink it. St. Louis Fed, which I would argue is the best on data. They've got the Fed. Today, hot off the press, okay, this new inflation report that they're looking at, it's PCE, which is what the Fed usually targets, excluding energy goods. Now, what are energy goods? It's basically oil prices. They say this is very different than core because core excludes food and energy. And in that energy, that's energy services like electricity and like natural gas. This doesn't do that in the orange line. This is just straight up PCE excluding basically what tracks the most volatile part of the monthly data, which is oil. They say it's a better measure to kind of smooth out the one-off volatility of oil prices, but also include things that people pay for and that aren't as volatile, like food and like electricity, which is increasingly a big deal. And what that shows is that it's not the big spike that we saw lately, and that a lot of what we're seeing really does have to do with oil prices and with the war. And so maybe, just maybe, the Fed can look through that.
if we exclude all the right things, we can get back to target.
All right, Warsh will be live pretty soon, but yeah, this inflation data was relatively good today. A lot of these stocks trying to get somewhat of a recovery right here. Rocket Lab at 78.92, trying to go for 79. Robinhood at 114. Zeta almost at 23. I feel like they've got to make a big attempt right here. The Trump quote about Iran wanting to make a deal, he said that last night on Fox, so that's not new news. It might be reported right now, but he said that last night on Fox. And so, I mean, we're going to see if Iran actually does want to make a deal right here. 79 almost on Mr. Lab of Rockets. CoreWeave, 78.86, down about 1.3%. Rivian's actually up 7%. Rivian's actually doing okay. SPY's up 0.5%. Again, big tech really leading the way right there. Robinhood almost back into the 114.30s. Micron is the one that's not getting a V shape at all, not even a little bit. 952 down 3. And I think this is the market saying we feel Kevin Warsh is not going to be bad here. As we get into this, D-Wave and the quantum stocks, those are trying to flip flat. IONQ, that's down about 1.3. Why would Iran make a deal when they said they were winning this war? That's a good point. Microsoft as well, flipping up. I mean, again, if we're striking them, either the strikes are so brutal that Iran is ready to make a deal, or they're not actually, ready to make a deal, and the strikes are going to be met with more strikes from them, and we don't actually have something substantial yet, but Trump is just saying it. So really, until we get actual details, we're just not going to know. Nebius right there, 201. At least Nebius flips above 200. Amazon, Microsoft, Google, Apple. Those are your big winners today, folks. Amazon 253. The Googs here 364. Microsoft 393. And then Apple is at 323. All right, Apple officially all-time highs here. Yeah, officially all-time highs. 4.75 trillion on Apple. Meta's the only one. Nope, Meta's participating. Meta was at 660, now 668. Tesla is barely participating, but she's green. And then NVIDIA is the only Mac 7 that's red. So every Mac 7 besides NVIDIA is what's holding up the market today, which, it kind of feels like the other high beta names might have to continue going down for the Mac 7 to hold up, because we've not had a day where everything goes green, at least in the past few weeks now. So if the high beta names, your Robinhoods, your Rocket Labs, your Nebuses, your CoreWeaves, your Semis, all flip green with the Mac 7, then it's just going to be a massive day. And so far, the algos have been, giving one sector the love while the others have had to feel the pain of it. Amazon almost 254. So this is still a pretty good day. I mean, if you have a decent chunk of Mac 7, which I think a lot of us do, you can't be upset about this. It's just the semi-high beta part of the port is what's taking a hit. Meta is now officially positive year-to-date as well. That's correct. Meta stock is year-to-date now up 3%. Officially up 3%. Yeah, AMD also, barely getting some downside moves right here, especially after the massive run that AMD has. The fact that it's holding only down 0.5%, I think is actually very, very bullish here. And Baba's holding up as well. Redwire, your space names. Redwire's doing better than the other space names. SpaceX has just not been able to close above 140. But that one's also been, in question of what's going to be happening. All right, Kevin Warsh should be live very soon, and then we'll see how the market reacts to that.
Associated with that, not the the Red Hat business and the other software that you would think of AI is eating software. Well, let's see what happens. They're going to report next Wednesday, and we've got Gary Cohn on next hour. We'll ask about it, but it's not clear to me that that's actually a story of And I spoke to Arvind, the CEO, yesterday, and he told me it's not a story of AI is taking our software business. He said some software will be disrupted by AI, but that's not what's happening. Ours is not that kind of user-based software, which is just a long way of saying, Paul, that maybe the market is overreacting to some of these software stories.
Yeah, I mean, I think so. But at the same time, you see the stories that say Starbucks using AI to, offset some of its spending on other areas. So, yeah, I mean, I think IBM will want to unpack more details of the results when they report next week. But overall, we think if you're going to focus on the AI bull market, you want to prefer semis over software.
Paul, that's a good start as we're just a couple days into earnings season. Hope to touch base with you many times in the next couple of weeks. Good to see you.
All right, great. Thanks, Carl.
Paul, thank you.
Well, we got some interesting M&A news this morning, originally broken by Reuters and confirmed as well right here with some additional details as well. It involves PayPal and a teaming up of the giant payments private company Stripe, along with the large private equity firm Advent, to make an offer, $60.50 a share, all cash, to acquire PayPal. As I've reported in the last hour, the talks have been going on for some period of time, is my understanding, or at least the effort that has been made by this combination to acquire PayPal. There is, I'm told as well by people familiar with the situation, a board meeting of PayPal's board of directors coming up on the 20th of July. The leak perhaps designed to put pressure on that board to make shareholders aware of this offer that is out there. It does represent a significant premium, although a number of analysts have weighed in this morning saying at that value, it's about 11.3 times fiscal year 26 earnings and 8.1 times enterprise value over EBITDA. And those are discounts to the 5-year averages that PayPal has had. But this is not the same company that it was, of course, once having a market value far, far above its current levels. It replaced its CEO fairly recently, of course, Enrique Lores, having come over from HP to run the company only in March. Oftentimes, when you do see that kind of a change and you see the undertaking of a new plan to revitalize the said company, there is a reluctance on the part of the CEO to consider a takeover offer. I have called a number of the board members at PayPal, who do include some luminaries as well, whether it's Carmine DeCibio or Dave Dorman, longtime CEOs, and others as well. No comment from Lores, or I should say no return calls, frankly. Nobody's calling me back this morning. What can I tell you? On where things stand there and
I think they would say rumors and speculation.
They might. They might. My hope is that on background, Sarah, they might tell me.
Do people think PayPal should take this deal? What do you think? Is this one, is this the best they're going to be able to get? Because, I mean, this is the only offer they really received, quite frankly, in the past few weeks now, or the past few months. SPY 754, Zeta starting to recover. Rocket Lab losing a lot of its steam right there, holding on to 78.20. Everyone's saying no. I mean, initially I said no as well, but then you also think, like, do they have any better deals? I think the board will still reject it because, they can't tolerate this being that bad of an offer. But, shareholders might say, hey, at least give us something here. ServiceNow, that's up 2.3 as well. 67.22 is the minimum. Don't ask me why. I have a feeling I know why 67.22 should be your minimum. Elon needs to buy them. That's been a theory. A lot of people have had that theory that Elon takes them out of their misery with X money. But I don't know if he's willing to pay as much as, as much as the market is implying that he should be paying right here. Meta 668. Microsoft, wow. Look at Microsoft go. Maybe today's the day she's going for 400. Maybe, folks. Amazon 254. Google at 365. Seeing a lot of freaking strength right here on the Max 7 as they are not slowing down. I mean, you know what it feels like? It feels like the market's saying we need to be in names that just have better fundamentals, even if they don't have as much earnings growth. Now, Apple at a 5 times PEG ratio and 40 times price to earnings for 15% growth feels a little crazy that it's trading at 4.78 trillion and Nvidia can barely get 15 times forward. But Apple's also a lot safer, and has always been a lot safer than than most of the names that are out there. Look at Amazon, 254. What a day for the mags. CoreWeave, 78. No, sorry. Yeah, CoreWeave 77.80. That's down to Nvidia 211. And then BABA 120. Amid what this offer for PayPal basically set a new floor for the company since it shows there is a company interest. Well, theoretically, but the stock is not trading at that floor, right? So I think that's why people are confused right here, that it should be showing a new floor for the company, but it's not. And I think that's getting a lot of people to think that maybe this isn't the right offer, or this isn't a real offer that can be taken seriously. And as a result, you're not seeing that $60 range. Meta right there is 668, because that is the offer, right? $60.50. The Tesla just flipped red. Tesla flipped not red, but it looks like it wants to flip red. Apple has a cold falling. That's true. I was thinking of buying a new laptop or MacBook soon for Apple, but I want to wait till the M6 comes out. SpaceX still down about 1%. Rocket Lab losing it heavy right here, 78.05, as this one continues to get hit. Where is Corning and TSM? Corning, wow, 6% down. That one's getting wrecked. TSM, that one looks like it's about to go red. Okay, so once again, it is, even with ASML having blockbuster earnings, Nokia, that one continues to get hit. The semis just can't find their footing here. Qualcomm's probably getting wrecked. Qualcomm barely up as that one's going down. All right, Warsh is talking. Let me go to him. Get on live.
Policy right. That's our clear and constant aim, the star by which we steer by. And if we get policy right, and we will, the inflation surge of the last 5 years will be a thing of the past. Just a month ago, I chaired my very first FOMC meeting. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly fluctuations are inevitable, especially in an unsettled world, underlying inflation over longer-term horizons is determined largely by monetary policy. As I've said before and will say today, inflation is a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to restore price stability. That was our focus when we met a month ago, at which we decided to hold the target range in the federal funds rate at 3.5 to 3.75%. Naturally, our work at the Fed demands a proper reading of economic conditions. As you might have seen in our report, economic activity is expanding at a solid pace, showing resilience in the face of recent developments. Household consumption growth is moderate, and manufacturing output has moved up steadily this year. The housing sector, however, strikes a different note. It gives a different picture and continues to lag. I want to highlight the most striking feature of our economy right now, and it's business investment. It is a surge in capital expenditures. Compare that to what we've seen for a long, long period of financial engineering. This is a better situation. The rapid pace of CapEx, which appears to be accelerating, reflects in large part the construction of infrastructure, including in and around AI and the immense demand for AI-related equipment and software. Investment in equipment overall increased about 8% for the year in the first quarter. Within that category, high-tech spending logged an especially impressive growth rate of about 25%. We don't yet know the extent to which the economy will benefit from this build-out. Yet it seems inevitable, at least to me, that what is now called AI investment will soon just be called investment. Even so, new opportunities for the economy introduce new challenges for policymakers. We at the Fed are monitoring the implications for the inflation and for the labor market. That brings me to the supply side of the economy, a subject worthy of equal attention, where productivity growth has been strong. And I'll note that this productivity growth predates gains from AI adoption. America's labor force appears to be broadly stable. Job creation has kept pace with the workforce. The unemployment rate low and has changed little, quite frankly, over the last year. We're seeing relatively few layoffs and only slight variance in the rate of job vacancies. Solid growth in nominal wages, too. I've been heartened by the welcome I've received and by the encouragement of my colleagues. We have a duty to point the institution forward, to take a fresh look at current practices, to make sure we're serving our objectives, and we're going about it systematically. As the chairman referenced, I appointed a task force in each of 5 areas that are central to the conduct of monetary policy. I'll just reference them and close. First, Fed communications. Second, our balance sheet policy. Third, our use of existing data. Fourth, productivity and jobs. And finally, the Fed's inflation framework. Our purpose here is to make better decisions in the conduct of monetary policy and put these years of high inflation behind us. We are the Federal Reserve, Mr. Chairman, and as determined as ever to fulfill our mission. Thank you, and I welcome your questions.
Thank you, Chairman. Each member will have 5 minutes to ask questions and get answers, and I'll start that off. And I'll start off with your working groups. I think credibility equals transparency, and the names that I've seen on your working groups, from Doug McMillan, former CEO of Walmart, to Mark Andreessen on productivity and AI, tells me that you're serious about getting real world experience and expertise involved in making decisions at the Fed. I want to give you just a minute of my time to walk us through perhaps 1 or 2 pieces of that, as we talked about the importance of having contrast on the committee, on the working groups. Really important from my perspective. I think it lends itself to having more confidence in the Federal Reserve. I want to give you a minute to talk about one part of it, and then I want to move quickly to AI.
All right, let me be brief, Mr. Chairman, but you're highlighting something that's awfully important. All institutions, including the Federal Reserve, which I am so proud to lead, filled with great people, on occasion, we need to bring new ideas to the fore. And after 63 months of inflation above the Fed's target, it struck me that any new leader should arrive at this organization and look to the very best minds that we could find. There's a lot of great ones at the Fed, but there's a lot of great ones that aren't even in the economics profession. And I reached out to 15 people who I have known and trusted with a diversity of views to see whether they would take the most important questions that are going to be the determinants of monetary policy and the determinants of the economy in the next 5 years, and see if they could sharpen their pencils and do their best work. It's a move towards transparency and new ideas. I'll just give one example before turning it back to you. In the last couple of days, we've gotten data on consumer price index, today on the producer price index. Any central bank would be happy to have the data going in the right direction. My view is these are all imperfect measures of the state of underlying inflation. So one of the task force is going to see whether we can do better, have better data from external sources, and even better ideas as to how important organizations like the Bureau of Labor Statistics, the Bureau of Economic Affairs, might think about how they could do a better job in an evolving economy.
Thank you. We met just a few weeks ago with Dr. Phelan, who's slated to be the head of the president's economic advisors. And we talked a lot about artificial intelligence and the impact it will have on our.
We'll get back to that in a second, but the Mag 7 continue to be the basis for the movement today. Outside of NVIDIA and Tesla, NVIDIA again, semis, Tesla more high beta, Amazon 3%, Google 2%, Meta 1%, Microsoft 3%, and then Apple just a massive day up 3%. So your semi names are getting demolished here. Intel down 5, SMCI down 2, AMD now is really getting hit. It was only down half, now it's down 4, NVIDIA down 1, ARM down 1, Marvell down 6. Marvell really getting hit right there. Dell down 8, Micron down 7. It is quite the dump here. I don't know if Warsh can say anything to save the semis right now, but they're not really having a good day. They're not having a good day. The Qs are getting hit because there's still a lot of semis and tech in general outside of the Max 7 in the Qs. The S&P has a higher weighting, so that's why the S&P is holding up. But yeah, that is, it's one of those things. ASML puts up really good numbers and the market can't move on it. It makes you wonder, imagine ASML didn't have good numbers. Imagine these semis in general just don't have really good numbers. Like if the semis continue to be stuck or their numbers are flat to okay, or even if they're really good and the market can't pump on them, then again, maybe they just need to consolidate even more. Now, a lot of these names are still up a ton. Marvell is still up a ton year to date, even if it's not at 330, but the semis are taking a break, to say the least, right here, as the Mag 7 continue to hold on. CoreWeave down about 3%. Micron's the most interesting because the Kospi was up yesterday, so the memory names faltering right here is showing a ton of weakness in that broader sector around the semis.
Economy and base might come down to something.
I do want to make it clear that in the near term, I think this investment is probably quite good for jobs as we're building out the infrastructure. And over the long term, my best guess is that this will improve American productivity and will improve the real wages and will help us on full employment. But between the short term and the long term, it can have a disruptive effect. And we're attuned to that. And that's part of the reason why I wanted to shed some new light on it with some outsiders.
My time is up, but I will submit one question for the record around the issue of indexing our regulatory thresholds. We've seen so much growth in the since 2019 that our institutions might need to see a little recalibration on the thresholds that we have put upon them. Ranking Member Warren.
Thank you, Mr. Chairman. So the Federal Reserve has long been plagued by a culture of corruption and coziness with Wall Street. Over the last 5 years, at least 6 senior Fed officials have been implicated in serious ethics scandals related to personal stock trading and self-dealing. But instead of trying to repair this broken culture, I'm concerned that you seem to be embracing it. At the time of your nomination, you owned more than $100 million worth of shares in private investment vehicles called the Juggernaut Funds and THSDFS LLC. And you refused to disclose the underlying assets to the Senate and to the public. You say now that you've sold those shares. In other words, somebody wrote you a check for more than $100 million days before you entered office. Chair Walsh, who wrote that check?
Senator Warren, this is a discussion you and I had in the public square 7 weeks ago, and I'm thrilled to tell you that I have fully honored the obligations I had under the agreement I had with the Office of Government Ethics.
Yeah,
and there is continued disclosure, which I'm happy to make as consistent with the agreement.
I asked you a very specific question. Who gave you $100 million right before you were sworn in? Was it a billionaire who has business with the Fed? Was it Stanley Druckenmiller, who's made billions of dollars betting on what the Fed does? Or was it a different billionaire? Who gave you the money?
I will fully comply with the Office of Government Ethics.
That's not an answer.
Well, it is an answer, actually, Senator, because there are obligations,
It's
and I will
$100
satisfy them
million
completely.
that you got just before you were sworn in, and you won't tell the American people where it came from. Let's go to another incident. As you know, the Fed imposes a blackout period where senior Fed officials are prohibited from talking about economic issues with outsiders. The idea is to, quote, reinforce the public's confidence in the transparency and integrity of the monetary policy process. In other words, no one gets some special insider information from the Fed. But shortly after your first FOMC meeting as chair, right in the middle of the blackout period, the Fed's vice chair for supervision was reportedly the featured guest at a secret dinner hosted by Bank of America for its hedge fund and Wall Street clients. At this closed-door dinner, she reportedly spoke about both monetary policy topics and regulatory policy. Now, I've called on the Inspector General to review her conduct, but you're the guy in charge. As chair, you set the tone on culture. Did Vice Chair Bowman provide any non-public information to the attendees at that secret dinner or discuss any regulatory policy matters that are subject to open comment periods?
Senator, I agree with one of the premises of your question, which is I do set the culture.
Good.
After my very first week at the Fed, I sent a letter to the 21,000 people at the Fed outlining our culture.
I appreciate that, but we have very limited time and a very strict chairman. So can you just answer the question about the vice chair and her secret meeting?
Sure, I'm happy to the extent I can share it with you. The vice chair has been an excellent colleague in my first 7 weeks. I'm aware of the letter you sent to the Inspector General. Out of an enormous respect for him, his investigation, what he chooses to do with it, I'm going to leave to him to do without trying to micromanage that.
So you
I'd be interested in the judgments that he comes to.
So you will support his investigation. Have you made your own investigation? Did you ask her if she spoke at a secret meeting during the blackout period?
I agree with the suggestion that the Inspector General is an independent actor, and I'd be very interested in his decision.
You just said you're the guy in charge. Did you ask her about the secret meeting that took place? Did you ask her?
I can answer a simple question, which is I wasn't at the meeting. I don't know the facts.
No one.
But I'd be very interested in the fact finding being done by an independent Inspector General.
Did you care enough to ask? How can you be chair and not ask your own vice chair whether or not she violated the blackout period, violated the law?
I think it'd be inappropriate for me to prejudge facts that are being discovered by an independent actor.
I don't know how you prejudge them if you don't ask.
Well, I don't know how to prejudge them if I wasn't in the attendance of a meeting.
Did you ask?
She's been an excellent colleague.
Did you ask?
I've asked her a lot of things about supervision and regulation.
Yeah,
we've been busy doing a lot of real work over the last 7 weeks.
I got to say, I'm going to take the same time you did. I just got to say.
You hope so.
The tone that you are setting is one that seems to invite corruption, and that's going to be a real problem.
We've had 7 weeks, Senator Warren, and we've set a tone of performance, accountability, responsibility, and integrity.
Senator Rounds has the floor.
Thank you, Mr. Chairman. Mr. Warsh, welcome to your first meeting.
Thank you.
Okay. A little spicy there in terms of an exchange with Warsh and Warren. Folks, the semis are in free fall right now. The semis are in free fall. Corning, 7. TSM, down 0.5%. CoreWeave, down 2.6. NVIDIA, down 0.5. AMD, down 4. Dell, just getting wrecked right here. 11% down on Dell. Micron, what is going on, man? 7% on Micron. Down at 919. I mean, this is pretty incredible right here for Micron to be taking this big of a hit, but it is. Qualcomm, that's also down. Your Max 7s are holding, and I think that's what's keeping the market up as well. AAOI, after AEHR's earnings, down 14 or down 10 right here, 113. AXTI down 5. Poet's down. Fastly's down. Air Test Systems is only up 30. It was up 50, so that's still pretty ugly. Amcor down 4. Cerebrus down 4. There's no major semis headline outside of a really good ASML earnings. So this one just feels like sentiment shift continues to be bad. SK Hynix 9% down after going up 24% yesterday. The space names are kind of holding on. Kinda. Rocket Lab at 7902, barely up on the day. The software names, where's Palantir? Yeah, they're holding up a bit. ServiceNow, Palantir, CRM. I mean, they are absolutely not experiencing anything like the semis are facing. You talk about a real rotation. I mean, the software names haven't like pumped, but they're not dumping the way that the semis are dumping. And that makes you think maybe there is somewhat of a rotation here. Yeah, SaaS summer, Mag 7 summer. That's what we might be experiencing. We got a hint of that last month. Then software went down. Maybe that's how this is going to play out. Micron 914 as that one continues to get hit.
Nominee for the trying to influence it.
Yes.
Can you talk a little bit about the logic? Am I on the right track with regard to the reasoning that you have for allowing the Inspector General to do the job that they were asked to do in the first place by members on this committee?
Yes, Senator, you're exactly on the right track. I'll just say more broadly that my fellow governors, my Reserve Bank presidents, they've received me incredibly warmly. I admit that I show up with a lot of ideas for reform in monetary policy and supervision and regulation and payments. I've only been there a short while, for 7 weeks, but instead of an institution acting inert, what I've found is my colleagues are really open-minded to change. What I found is we're going to have a good family fight. I'm not imposing ideas. That's part of the idea of the task forces the chairman referenced. But we're going to try to be better at our jobs, fulfill our mission, be accountable, be responsible, and do it all with the utmost integrity. That's my intention. We're early into this. I don't want to prejudge outcomes. We made a lot of progress in a short period of time, and frankly, I'm proud of it.
I like the idea that you're putting together working groups. I think that will give an opportunity for a fresh look at a lot of things going on. As I shared with you in a phone call earlier, it's not a matter of being necessarily vindictive or angry with previous chairs or previous members. It's a matter of making things better for the American people. And that's really what we ought to be talking about today. So let me just, in the minute and 14 seconds that I've got left on mine, let me talk a little bit about Basel III in particular. I think you and Vice Chairman Bowman and the respective financial regulators, I think you've done a good job in terms of your roles with regard to the Basel III reproposal that was issued this March. The 2023 proposal would have substantially increased common equity capital requirements for Category 1 and Category 2 banks by approximately 19%, failing to strike a balance between maintaining resiliency of our banking system and doing so without hampering lending. I think this is a really critical item, and next to what artificial intelligence is going to do in terms of our productivity, I think it's one of the biggest issues out there. With the June 18th comment deadline now behind us, are there any other categories of feedback that you're weighing more heavily than others, such as the adjustments to leverage ratios or anything along that line? And if I could, is there going to be a go-live date this year sometime? Any idea when you might actually be able to talk about when this thing is going to go public for us?
Senator, well, thank you for your question on supervision regulation.
I'll go back to that in a second, but my goodness, the semis are just dying. Absolutely dying right here. Micron down 7. Wow. Maybe this is why. Even though I don't know if this is bearish. The information reports Apple is hunting for AI chip acquisitions as Dell falls 12%. Apple is hunting for AI chip acquisitions. Wouldn't that be bullish semis, though? Apple seeks AI chip company acquisitions to enhance server capabilities. The company's in-house M2 chips haven't proven sufficient for their products. Dell below 400. That would be bullish. Right? I don't think that would be necessarily bad. That would prove that, there's more demand for semis. Micron, 7% right here. Qualcomm down 1. TSM, they've got earnings. That's down. Nokia down 4. Corning down 9. Where is SanDisk? SanDisk is down. Oh, my. Okay, something's happening for this. For a random 13% decline on SanDisk with no news, there's got to be something the street's upset about. There has to be. And if there's not, then it's even more bearish, because if these names could just fall out of the sky like this randomly, it means sentiment is absolutely dying right here. AMD down 5, NVIDIA 209. Can TSM save the market? I don't know if it's an earnings thing anymore, dude. I think it feels like more of a structural issue. It's definitely not a Trump thing that the street's reacting to. So maybe TSM has good earnings, but does that even matter given ASML had a great earnings and, that didn't really matter? I don't know. People are moving to crypto. Could you imagine we get a SAS Mag 7 and Bitcoin rotation for the next few months? I mean, that would be kind of crazy. CRM, that's up 1.85. TSM down 1. SanDisk down 14. Narrative has changed the past 2 days in Asia. Well, we talked about South Korean leverage. I mean, 350,000 accounts got liquidated in South Korea on Monday. Many of them with negative balances. So, and that's because Kospi had a 10% down day on Monday. So like, there's definitely a bit of fear that the leverage is getting too much. And at some point the leverage breaks. Is that enough to take down the semis in the way that it's being taken down? Maybe, but it's becoming a bit more aggressive. I also wonder, do these get a bounce, right? Dell's down 13%. At some point, it's either another free fall or it gets somewhat of a bounce. Same thing with Micron. So I wonder if the dip buyers step in and say, all right, enough is enough here. Wasn't the Mag 7 rotation inevitable? Yeah, I mean, it was definitely inevitable. And a lot of us that have been buying Mag 7 stocks have felt the pain of underperformance compared to the semis. And maybe that switches. But I think the Mag 7 rotation was not expected to happen like in the summer going into earnings. You know, it was expected to take months, especially because they're going to keep diluting, they're going to keep levering up, they're going to keep spending on capex. So they're going to keep spending. It might just take more time. But Micron with their 905, we will keep an eye on these names. But every little dip, Micron went up to 912 from 907, now right back down to 905 is being sold off as buyers try to step in, but it's just not holding on. Intel 114 to 101. Yeah, I mean, these are pretty ugly moves right here on the day.
As I mentioned for the U.S. economy, as you mentioned, we're out for public comment. I'll be very interested in the comments before we go final with the proposed final rule.
Let me just say, this is already off to a good start. But we're going to stay around 5 minutes.
Chips that are going up. We're inferring, which is just a fancy word for guessing, when the effects will happen on the supply side of the economy. I don't view a one-time change in prices as necessarily being inflationary, because I think there's a supply response. In that way, this is different from a foreign conflict and what it might do, which tends to reduce the supply side of the economy. Will it increase measured prices over the course of the next 12 months? I suspect it will be. Whether that's inflationary or not, that's up to the Federal Reserve, and we're going to have something to say about that.
Okay. Now, one of the interesting things about our economy is becoming more and more productive. But one of the disappointing things is that household pay is not rising relative to that productivity. And we're seeing less benefit from productivity gain. So what's driving this trend?
Yeah, it's a great question. I don't have a perfect answer to it. Like you, we think a lot about real take-home pay. The part that the Fed can do a lot about is the real part. If inflation were lower, real take-home pay would be higher. That's just the arithmetic. Mm-hmm. Your other question's a broader one, which is what are we going to see the productivity improvements lead to a surge in wages? Wages have moved up at a reasonable pace, but it's likely that as productivity moves up more, we should see wages move more. Getting that timing right, understanding when that happens, that's a puzzle, and it's a puzzle we're going to continue to work on.
In the last 10 seconds, will AI eliminate jobs at a catastrophic rate?
So you're asking me to prejudge the task force. My short answer is over the long term, absolutely not. I believe that this is a long-term job creator. But will it be disruptive? And will some people have their jobs at jeopardy because of the new technologies? On that, I can't offer any sort of guarantee or comfort.
Senator Britt.
Thank you, Mr. Chairman. Chair, thank you so much for being here with us today. Certainly appreciate the opportunity to have a conversation, and obviously so early in your tenure in this new role. In this year's monetary policy report, one of the most encouraging themes is the increased in business investment that we're seeing across the country. In Alabama and many places, we're seeing companies expand, manufacturers grow, and communities are benefiting from that investment. I believe that these are good signs and that they're also important for the future because they help us determine whether America remains the most competitive economy in the world. My question for you is, as you look at the economy, what data tells you that today's investments are laying the groundwork and the foundation for a stronger long-term growth and greater American competitiveness?
So it's a great question, and thanks for highlighting the capital investment boom. This is what most countries are searching for. This is the seed corn for the next group of job creation and productivity. To be honest, over the last dozen or so years, we have been waiting for the surge in business investment. I know in some academic accounting sense, this is leading to a surge in prices in the next 12 months. I don't want to sound dismissive of it. The surge in prices is real, but I'd sure rather the most successful companies in the world investing in property, plant, and equipment than doing a share buyback. So I'm encouraged by it. The trend is our friend here, and this business capital investment is contributing massively to the GDP we've seen in the last 12 months. My colleagues know I'm not big for forward guidance, but I would guess that that trend continues. What gives me optimism about it? Well, when the private sector deploys this amount of capital, they must see something shiny at the other end of that rainbow. They must see a very good return on investment. That's why they're taking this capital and they're putting it to work. I tend to think that private investment has a multiplier way higher than 1. I'll let you and others judge whether that's true of government spending too.
I'm going to go ahead and switch gears because I know we're on a tight time frame today, which I appreciate. And I'm going to follow up on a question that the chairman asked. I'd like to get you to kind of dig into this. Some banks are already approaching and crossing into new tailoring categories, and they're making staffing and compliance and long-term business decisions based on thresholds that haven't been updated since 2019. At the same time, the Federal Reserve continues to rely on those categories and other regulatory frameworks. So my question is, how are you thinking about updating these tailoring frameworks when it comes to what banks can expect to see and proposals in the future?
So it's a great question, one I take seriously. To be candid with you and the chairman and the other members of the committee, monetary policy has distracted me a bit in the first 7 weeks, but the Federal Reserve chairman is supposed to be the chairman of monetary policy and payments and consumer affairs and supervision regulation. But I can tell you this, Vice Chairman Bowman has been working on these initiatives. She has briefed me about them. And broadly, I'll step back and say modernizing our banking system, streamlining regulations so that the rules that apply to the systemically important financial institutions are not one size fits all for every other. The secret to the American economy is we have a few thousand banks and other providers of credit who know their smaller markets bigger. I'd rather have that system than what most of our G20 peers have, where they have a half a dozen institutions implicitly backed by their government. I think reform is coming to supervision and regulation. I have my own ideas that might be as dramatic as I've already shared on monetary policy here. And I think the sooner we can get to the bottom of it, the better. If I could say one more thing, the reforms we've been putting in place over the last 15 years coming out of Dodd-Frank, as we learned in the Silicon Valley Bank example and the First Republic example, they didn't work perfectly. My predecessors had very little choice but then to do another overall bailout. We don't want that to happen again. So we want to tailor the rules and the capital so they serve the best interests of the U.S. economy, which I describe as a system that is safe, sound, and competitive.
And I just hope, given what you've said, we double down on reviewing the framework. We know how important tailoring is, and also just the need for regulatory certainty. So thank you for that. In my last remaining seconds, I just want to say thank you for your commitment in the first 7 weeks, almost 2 months. You said it earlier, but to performance, to accountability, to responsibility, and to integrity. Appreciate.
Okay, so Warsh is saying pretty much everything he said yesterday around jobs and productivity. Not that crazy. Micron, a little bit of a bounce, 904 to 918. Maybe that's somewhat of the relief here today. The software names are also starting to flip red, or at least lose their momentum. Salesforce, ServiceNow, and Palantir. SanDisk right there. Down 12%. I don't know. What theories do people have? Do any people have any theories other than a good old-fashioned flush out in the middle of July? Because, I mean, it just feels like that is how this is playing out. There's not any crazy chip news. The Iran stuff, where's oil? Oil's actually down. It's down from 80. Just a weird sell-off here without a reason for it. Outside of, you know, the market sentiment on semis just not being good. Hedging bets for earnings season. Amit didn't wear a button up today, that's why. Flushing out liquidity. Yeah, I mean, it's just the level of liquidity that is being flushed out here. Also, I mean, you know, liquidity has been flushed out in the semis for the past month, basically since June 15th. I don't know. Are people buying the dip? Put in the chat if you bought the dip on anything. I have not bought the dip. The only thing I bought yesterday was Microsoft and ServiceNow. Microsoft doing pretty decent since then, but that's just because all the Mac 7 are doing decent. I have not bought any of these semi dips here. Oracle, that's going up a little bit. DRAM, is this the dip buy today around memory? That's down 7%. Oh, well, yeah, QXO has been taking a little bit of a hit right here. It's up today. Yesterday was down. I think it was down just based on inflation and interest rate expectations, you know, going the wrong way, as that is more rate sensitive, but it is up on the day. Dell now down 11, bounced from 399 to 403. Robinhood getting smacked. Robinhood really faked us with that 116 today. Really faked us right there. But there you go. It is taking a pretty big hit right there. 112.91 as that is down. AppLovin, this got hit on Friday or Monday. AppLovin now 449. That's flat. Mitt, why are you not buying SK Hynix? I'm not in memory. I mean, look, I think it theoretically should do well, but I think the easy money has been made in memory. I don't think anyone can deny that. I mean, if you're buying Micron for 10, 20, 30, 40%, that's just not a compelling enough reason to take the risk to buy the memory names, although I think they are cheap. I don't think you have to sell. I mean, if you bought it at 300, 400, I don't think you have to sell here because it probably goes higher. I just don't know if it's the easiest money in the market right now anymore, even if the valuation is incredibly compelling. I mean, any whiff of news that oversupply or any of this stuff, now that sentiment is kind of bad, can taint it. I mean, for Micron to do the 3-4% every other day that it was doing, we had purely bullish excitement and momentum. That has started to fade aggressively. That could come back, but I think that's more macro dependent now. So yeah, it's cheap. It's just a question of, like, there's a lot of stuff that theoretically could be cheap and theoretically is more in theme. I mean, if SaaS is more in theme than the semis right now, there might be an easy 20-30% in some individual software names versus just Micron. I don't think it's a horrible buy. I don't think people are crazy for buying Micron here. I just think, you know, now sentiment is kind of going against you and the risk might be a little higher. Unless we're taking Micron to 2 trillion, which would be, you know, half of NVIDIA's market cap, which I don't know if the street wants to do. Dell right there, down about 12% as well. Low retail interest now, maybe. Even though I think retail's in, I think the suits have taken more of a break for the summer, more than retail. But if we keep having ugly, that's the one thing about the market. You keep having ugly days, yeah, retail's going to stop caring a lot. You know, people might just close their brokerage accounts and say, you know what, we'll move on. I've got to be last in the stock draft. I've got to be last. No, Chris is actually last. Wow, Jason and Chris, I'm number 4. So me, Jason, and Chris obviously have the most high beta profiles or high beta portfolios. Matt's up 2%. Tanner's down 0.1. Steve's down 3. I'm down 10. Jason's down 10. Chris is down 10. They're down a little bit more than me. High beta. these semis are taking an absolute beating here. Apple again, all-time highs today. Now again, I think Apple's valuation is a little up there, but it's not as concerning when it comes to the nature of semiconductor earnings. But the problem is ASML and Air Test Systems had really good earnings. Look, if the market switches their tune to, hey, the earnings are good, but like, who cares? It's cyclical, which again, you know, there's plenty of arguments against that narrative. But if that's how the market starts interpreting this stuff, then we are back to the same argument of, okay, the market's going to go into stuff that is free cash flow positive and sustainable in terms of growth versus purely just caring about earnings. As a video right there is that too. Let's go back to Warsh. We'll keep going.
Most important places to start is with the Fed's balance sheet, an issue I've consistently raised with other Fed governors. The Fed expanded its balance sheet dramatically during the pandemic, peaking at nearly $9 trillion. Since 2022, the Fed has shrunk it down to about $6.5 trillion in December 2025. And I'm glad to see that the Fed was making progress over the last few years, but the balance sheet is still not down to pre-COVID levels. Actually, the balance sheet is rising again and now stands at around $6.7 trillion today. Chairman Warsh, do you see the balance sheet increasing again as a trend in the right direction or the wrong direction?
Senator, thank you for the question. I've been focused on the Fed's balance sheet, frankly, since my last day at the Fed some 15 years ago into the present. I don't want to prejudge the conclusions of this balance sheet task force, where, as the chairman said, I put together a team of rivals to fiddle with it, to evaluate it, to come up with their own judgments. But I'll give you my predilections. Monetary policy is made currently through at least two material instruments: interest rates and the balance sheet. In fact, we grew the balance sheet, created quantitative easing when I served the last time in the darkest days of the crisis, because we had already cut rates to zero. So expanding the balance sheet had the intent of helping markets clear, but it was also another tool of monetary policy. I still believe that is true.
Wasn't that supposed to be temporary?
Indeed, that was our entry principle, was that we would get out of that business. The central bank has not, for a whole range of reasons, gotten out of that business. My general view is, as we think about inflation risks and we think about the conduct of monetary policy writ large, we have two instruments that we should be thinking about. The balance sheet is one of them. I'll make only one other point. Monetary policy needs to be architected, needs to be designed by the policymakers around the FOMC. The plumbing, the operations, how we do that is conducted by the New York Fed. I want the architecture to drive the plumbing, not the plumbing to drive the architecture. We're going to make a monetary policy decision with respect to the balance sheet. I'm very open-minded to changes, and any changes we make will be well discussed, well shared, and I think quite deliberate. And the financial markets, who have seen the balance sheet grow effectively for a generation, they'll have plenty of time to adjust if we make changes.
I know you said you just wanted to make that one comment, but I'm going to push you to ask for a little more. What do you believe is the smallest balance sheet that the Fed could operate with?
My predilection, my inclination is interest rate policy should be the driver of monetary policy. The balance sheet should be as small as practicable to conduct operations. And the balance sheet can expand when there's a crisis. The balance sheet can also expand if an institution needs liquidity. That's part of the reason why we've created a discount window. But a permanently large balance sheet with a duration of assets that are larger than the duration of assets of treasuries, for example, that are held in the broader public markets, boy, that sure seems a little bit more like fiscal policy than I'm comfortable with. So I would like us to have a leaner, meaner balance sheet, but it's a discussion for my colleagues, and I've got three real pros that are going to help us think it through.
All right, well, I have run out of time, and I'm sure the chair will be happy that I'm going to maybe get done before it reaches zero.
Thank you.
But I do have a question I'll follow up with for the record on scams, because this is something that the banking industry is telling me they're increasingly seeing, and it's costing people who deposits a lot of money. So I'll follow up with that.
Senator, we're opposed to scams, but I'm happy to follow up.
Good to hear. Good to hear. This is great. Senator Van Hollen.
Thank you, Mr. Chairman. And Mr. Chairman, we agree on that point. Let me turn to the headline inflation numbers that came out yesterday at 3.5%, above the Fed's 2.2% target. Prices are too high for families and we need to get them down. I think we can agree on that. At your press conference a few weeks ago, you said that higher inflation in part, and I quote, reflects supply shocks that have driven price increases in certain sectors, including energy, unquote. In other words, a reason that we're seeing prices go up is that the supply of products and services has dropped in some areas of the economy, right?
Yes.
And I do think it's important that the public understand the causes of some of these supply shocks. You would agree, would you not, Mr. Chairman, that the war in Iran has caused a supply shock in the energy markets?
Yeah, the military conflicts have caused the price of oil to be higher than it otherwise would.
Absolutely right. And Americans are paying the burden of that as we go. We've also seen supply shocks in other areas. Last year, your colleague, Austin Goolsbee, president of the Chicago Fed, said that, and I quote, a tariff is like a negative supply shock, unquote. And we've seen plenty of tariffs. Obviously, we have the Supreme Court decision that may bring those down over time, the impact of it. But the negative supply shocks have been real and can be traced to the Trump administration agenda. So when you say that supply shocks are part of the reason prices are going up, you would acknowledge that they're the result of decisions that have been made by the president, like going to war with Iran, right?
So what I'd say is particular price shocks happen to particular prices that we don't have control over, but I don't want to suggest we don't have control over inflation in the medium term. That's our job. But screwworm affects beef prices. Other things affect oil and oil prices and milk prices. And I understand that has an effect on people's household budgets.
Indeed, it does. And I think we've seen the price of energy go up by billions and billions of dollars. And the American people are essentially paid for that at the pump and other places in their pocketbooks. As you know, your predecessor as chairman was regularly harassed and berated by the President of the United States on social media with respect to interest rates. At least so far, you seem to have escaped that fate. But I do think it's important that we have an understanding of whether or not the president is trying to influence Fed conduct. I know you were asked recently at your last press conference about any communications with the president. I think your response was, on the president, I don't have anything for you. Mr. Chairman, was that a yes or a no with respect to whether you've had communications with President Trump?
So I like what I said the first time. Senator, I don't have anything for you. I will say this, though. I do meet with the Treasury Secretary weekly. I talk to him often between that.
Mr. Chairman, I just want to make sure
I'll make my own decisions as monetary policy.
I just want to understand the answer. Have you or have you not had communications with President Trump since you took this position?
I just don't want to be in the business of sharing discussions that the president and I have. Okay. I will tell you.
He's definitely talked to Trump. I mean, that's an easy yes or no. It's like, nope, I haven't talked to him. Or yes, the yes sounds bad. So instead you come up with the word sound. He's definitely talked to Trump since he got in.
What I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing. Okay. And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
So Mr. Chairman, I mean, I think it's important. I take from your answer, you've had communications, you don't want to disclose the content. Will you commit to do what your predecessor did, which was to release your appointment schedule and conversations with President Trump?
I don't know what the past practice was. I will be in full compliance with the law. As I understand it, there's an ongoing FOIA request on my calendar, and I will share it consistent with the law. Well, I believe the first one's already come out. Actually.
I think this was this wasn't in response to any legal requirement forced by FOIA. It was a question of transparency, and I do think, given the president's past record of trying to influence Fed behavior via social media, with respect to your predecessor, if he's trying to influence Fed behavior through private conversations with you, I think that needs to be something the public is aware of. And I'm asking you whether you will commit to disclosing when you have conversations with the President of the United States.
Senator, I can offer you this assurance. The president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy. And if he tried to, I would continue to keep my head down and do the job. I don't have a long record, but I've got a 7-week record. And before that, I had a 25-year record. And I think that should count for something.
I appreciate that. I hope you'll just follow the precedent your predecessor.
Senator Kennedy, the floor is yours.
Well, Senator Van Hollen's my buddy, so this is not meant toward him, but I always get a kick out of my Democratic friends talking about transparency. You know, toward the end, God bless him, you could bake a Thanksgiving turkey in the time that it took President Biden to walk across the stage. And they kept it quiet till they couldn't. I'm sorry he was in that condition, but this transparency stuff cuts both ways. What's wrong with you talking to the President of the United States?
So, Senator, I've got a wide lens. I'm interested in hearing points of view from a whole range of people. We have a narrow remit. I'm interested in what's happening in the world, in the Middle East,
But I mean,
and
is
elsewhere.
there anything wrong with it? Do you have to, when you do it, do you have to like go out and look for the last phone booth in Washington and put a bag over your head and sneak in there and call him or return his call? Is there anything wrong with that?
I certainly don't feel uncomfortable receiving a call from the chairman of this committee or the President of the United States.
Okay. You think Ben Bernanke ever talked to the president?
When I was a governor, I recall several conversations and
How about
frequent
Alan
meetings.
Greenspan?
When I was a young staffer in the White House, I remember being honored by him coming into the White House and meeting with the president and the president's advisors quite frequently.
Okay. I think what I would give me concern, and I think it's the basis for my colleagues' concern, is that you just do whatever the president says, but you're not going to do that, are you, or are you?
Senator, I'm going to call it the best I see it. The president never asked me to do anything inappropriate, and if he did, I wouldn't do it. I'm going
Okay.
to follow the law and do my best to follow the remit you gave us.
Okay, so in the last year or so, recent past, I'll say, the Fed cut rates 3 times because they were worried about the labor market. Is that a fair assessment?
That's my sense of what
And
they did
it
before
worked.
Mr. Ravel.
It worked, correct?
Well, that's a longer discussion. They did
Well, is
cut
the
rates.
labor market in a mess today?
The labor market's in good shape, but I wouldn't want to draw that causal connection.
So I don't have much time, Mr. Chairman. I love you like a taco, but you don't filibuster on me. So it worked, okay? Now we have inflation, okay? What caused it in 20 seconds?
In 20 seconds, inflation is caused when a one-time change in price is broadened out.
I know what inflation is,
And the
Mr.
Federal
Chairman.
Tell
Tell me what caused it.
Monetary policy, sir.
Okay, well, I would say what is causing it is AI, the conflict with Iran, and probably the residual effect of the fact that some imports have become more expensive. Okay? And I think any fair-minded person would conclude that. There was a lot of economists said, the impact of inflation on the rise in the cost of imports would be a one-shot deal. You can teach that one round or flat. I don't know. I think it's probably had a residual effect. Okay, is it temporary or is it permanent, the inflation?
It's not going to be permanent under my watch, Senator.
Okay, what are you going to do about it?
So we're going to do 3 things. One is for those people in markets that think the Fed really was comfortable with a higher level of inflation, we're doing our best to disabuse them.
Okay, you're going to talk about it. What's the second thing you're going to do?
We're going to take ownership of it. We're going to say we have the power to do something.
Okay, you're going to own it.
That's
What's the third thing you're going to do?
We're going to look at our tools in the changing economy, both balance sheet and interest rate, and see whether we need to adjust policy to take it head on.
You're going to look at your tools. That's the third thing. I'm not asking you what action the Fed's going to take. That would be improper, Mr. Chairman. I wouldn't do that, and you wouldn't tell me anyway. Get specifically, like you're talking to a 10th grader, okay? Not. What are your options? Leave it alone, right? Leave rates alone. This is one option.
That is an option, Senator.
Raise rates.
Another option.
Cut rates.
A third option, a non-exclusive list of options, but yes.
Well, and a lot of it depends on whether it's temporary or permanent. So how do you decide whether it's temporary or permanent? I got that in with 6 seconds left.
Well done.
You use 5 task forces to get to the big and hard questions instead of trying to paper it over with policies that have not been proven as successful.
Senator Cortez Masto.
Thank you, Mr. Chairman. Chairman Warsh, good to see you again. Thank you for meeting with me.
Thank you.
In terms of price action, very small bounces, but still pretty ugly. Dell, instead of being down 12, it's down 10. Reddit was down 5. Now it's down 1. Palantir just flipped green. Rocket Lab only down 1. So still pretty ugly across the board, but I mean, Meta is absolutely crushing it. Meta 684 right here. The Mag 7, what a day. What a freaking day for many of these. I mean, Meta is $15 away from 700. Microsoft 395, $5 away from 400. Google just took off today like a rocket, almost 370. And then Amazon, not 260, but I mean, it was at 228 a couple days ago. So, or a couple weeks ago. So, I mean, look, for those that are heavy in Mac 7 and software, today's a great day. And today is not feeling ugly. If you're super leveraged into semis, it's a little bit more pain, but if you've got a bit more of a balanced portfolio, there's unless you're 100% semis, there has to be some stuff bouncing out the port. And I think we're seeing that with the best companies in the world that really haven't made a move all year, starting to finally get a little bit of a breakout. Robinhood right there, 114.70. QXO's up 4. Then Google up 2.7%. It feels confirmed that semis were holding the Mag 7 back. It does kind of feel like that. Now that they're letting the Mag 7 run, yeah, it does feel like the semis might have been the deterrent to get them to be able to run. But do we really have to have it like that? Does the market really have to be only Mag 7 and software go up if semis go down? Or can we have a more holistic viewpoint of the best semis go up with the Mag 7s and the best software names? You know, as of now, it's been software has to go down for semis to go up. So maybe it ends up being the opposite right here. But that is what we got. Ugly day for the semis. Really nice green day for pretty much everything else.
You've talked about the task forces. What's the timeline for getting reports from the task forces?
So I'm not a very patient person. People have said that to do all this good work, you'll need years. I gave them 6 months.
Wonderful. Thank you. And that will be made public?
Yeah, the details, even much of the deliberations, I want to do that in the public square because we all own these decisions at the end of the day. Ultimately, decisions will be made by my FOMC colleagues. I think they'll start to get briefings on some of the early reports from the task force, early indications, hopefully as early as September. With my expectation, hope by year end, we're going to hear their conclusions and decide what to do with it.
Thank you. And then just for clarification, in January of 2025, do you recall the inflation rate? It was about 3%, correct?
I'm going to have to take your word for the precise number, but I knew inflation was still well above target.
Yeah, it was about 3%, and that's when Joe Biden left office. And the current inflation rate right now is about 3.5%. Is that correct?
There are various measures. I'm confident in telling you it's been above target for 63 months.
Is it above 3%?
By some measures, by other measures, it's not. But I don't want to suggest I'm happy with any of those measures. I'm not.
Okay, I appreciate it. Let me talk a little bit about an area that is important for me, and I think many states that deal with a hospitality tourism industry. Unfortunately, under this administration, we've seen significant declines in the number of international visitors to the U.S. The current situation has actually led to our travel trade deficit in this country going from a $51 billion surplus in 2019 to a $72 billion deficit today. How does the Federal Reserve governors consider the specific impact of higher unemployment, lower wages, and reduced economic activities in communities with large tourism economies like Las Vegas?
So we are consumers of this information. We are keenly interested in the goods side of the economy and the services side of the economy. My view, which is not universally shared in the economics profession, is that there's no limit to what this economy can grow. Productivity-led growth can move higher, and that doesn't tell me it's inflationary. But we care about the services part of the economy, and we're trying to take that into account when we try to make decisions about the dual mandate.
Well, I appreciate that because you're right. Your dual mandate is maintain stable prices and full employment. Let me tell you what's happening in the hospitality industry because of the policies of this administration. When you talk about full employment, it is not happening. What I am hearing from people in my state is that
Micron below 900. Rocket Lab loses 77. A little bounce. Nvidia 208. It's starting to get flushed right here. Even the Mag 7 taking some red candles, but they're obviously up a lot on the day. And Nebius 193. Marvell low of the day. CoreWeave low of the day. Yeah, we're starting to see the lows for the day potentially come in right here. Either they bounce here or, these lows are just getting started for even new lows. But Micron really getting hit there. And then SanDisk, ASTS. SanDisk now down 13. ASTS, that is down 3. SpaceX, wow. 80 cents away from SpaceX going below IPO price. 135.80 here on Mr. SpaceX. Maybe today's the day, but they're definitely going to try to keep it above that 135 level.
A lot we can do to make sure that the entire grocery aisle doesn't have higher prices, and that's what we're committed to do.
Thank you.
Senator Haggerty.
Thank you, Mr. Chairman.
Okay, we've been listening to Fed Chairman Kevin Warsh testify before the Senate Banking Committee. Our Steve Leisman joins us now with some of the highlights. Again, no real hints. He's very serious about inflation, and he doesn't like where it is, and he's clearly more concerned about that than jobs. But question is, what does he do about it?
Not much hint there. He just said moments ago, the employment side of the mandate looks, quote, pretty good. The inflation side of the mandate looks less good. But he did say he was happy with the recent inflation data. He talked about the near-term disruptive effects of AI, but said, you know what? That's a high-class problem to have because it means massive investment in AI, which he thinks is ultimately good for the country. A lot of talk about independence. Interestingly, he maybe subtly characterized his refusal to cut recently in the first 7 weeks in office as a sign of his independence, says the president has not tried to influence monetary policy. Unclear from his comments if there is an investigation by the Inspector General into Vice Chair Michelle Bowman's meeting the day after the recent Fed meeting with Bank of America. That's IG's independent. He said they'll make their decision. He wants a leaner balance sheet with a duration that matches the outstanding treasuries that's out there, but wouldn't prejudge the size of it, waiting for the task force. Finally, he did talk about kind of reform at the 12 Federal Reserve banks, talk about them each having being a center of excellence for a particular topic on the economy, Sarah.
I thought one maybe key insight was also there were a lot of questions on AI, which I appreciate from the Senate today, more, I think, relevant than the House yesterday. But one thing that he said on AI was that the inflationary sort of impulse from the build out of AI is not like geopolitical risk. He said, because on the other side of it, in technology is disinflationary. I thought that was kind of an interesting window because he also characterized it as something there's going to be his favorite phrase, family fight over, which is whether what we're seeing from AI and inflation is something that the Fed needs to respond to. And it feels like he's more in the let's wait because it's disinflationary camp.
Yeah, I need to tell Kevin that most of my life I've been trying to avoid family fights. He seems to welcome them. I guess people have different tastes. That said, Sarah, there's an interesting development that's happened that you're pointing out here, which is that there's been a gradual acknowledgement that the initial impulse of AI through all of this investment is indeed inflationary. And the question becomes, to what extent is that something that monetary policy right now should address? I'm not sure it's something that Kevin Warsh himself is all worked up about. I think it's part of a larger scenario when it comes to AI. John Williams talked this morning about things that were working well in the economy, talked about surging business investment. offsetting some of the weaknesses that we've had. And when you look at the inflation numbers, one of the things you see is that housing has been a place where there's been disinflationary forces right now. So it's all a mix. And the idea that ultimately, as you point out, it would lead to productivity kind of suggested to me that if all things being equal and AI was the only inflationary force in the economy, Kevin Warsh would not raise rates to cut that off.
Yeah, I agree. All right, Steve, thank you. We know.
All right, folks, that's what we got from Mr. Kevin Warsh. Still, obviously, a bit of a mystery today why we had this ugly flush out as Micron really struggling to hold 900 right there. But nonetheless, it is indeed a flush out. And the fact that Robinhood's actually holding 114.90 is very impressive. Kind of skeptical of if that could actually hold, given everything else is going red. But there is some relative strength in different sectors versus the semis. SoFi, that's still down 1.2. Again, the Max 7 doing okay. IBM, worse than yesterday, 214. Yesterday was at 217. So IBM got hit. Broadcom got hit. Celestica down 4. Marvell in free fall. Morgan Stanley flipping green. AAOI still down 12. I feel like there's something deeper the market has figured out. And eventually it will become more public what that is that they figured out, whether it's about Iran, oil, or it's just algos being algos today, taking a lot of these names down. Nebius down below 193, dude. 185 was that pre-market low last Wednesday. AMD was holding up. It really was. But if high beta goes down, AMD's kind of got to go down with it. 5.83% right there on AMD now, 516.6T. And then NVIDIA, which was 214, and NVIDIA is the only Max 7 outside of Tesla that's just getting destroyed, 208. Is it the CXMT IPO? So CXMT is a Chinese memory company. I don't think that's going to have an impact on the broader semis. If anything, that's just another memory company that's coming into play. I mean, that broader China, fuels the supply of memory thesis that drives down memory prices. It's not as accurate given the Chinese companies. Given the Chinese companies primarily get most of their memory from CXMT, so the domestic demand for that is enough to not disrupt the demand from Micron, SanDisk, etc. So I wouldn't think it's the CXMT IPO that's causing this pain. But I feel like there is a reason. I just don't think we can find the reason. Benny says, to be fair, I think this is healthy. Well, it sucks to say it, but yeah, like Marvell at 330 was not healthy. And I think, anyone who looked at the earnings and then looked at this thing going up $80 billion because Jensen said it should be worth $1 trillion probably would agree. Like, that wasn't healthy. And so we're seeing that come back to reality. The problem is Marvell caught a lot of people from 220 to 330 because of Jensen's comments. And look, it is what it is, right? If you buy stock because the CEO says it should go to $1 trillion, then if there's nothing fundamental about it going up, there's nothing fundamental about it going down either. So the rotation is healthy. It's just there's so much leverage in the semi names that it feels bad. But if you're not that heavy in the semis, you don't have every single bottleneck that's out there, and you just have good cash flowing businesses like Amazon, Google, Microsoft, Apple, ServiceNow, Palantir, Salesforce. I mean, these names that have sucked all year, Meta, they're waking up. And you can't be too upset about it. Why are CapEx beneficiaries getting so badly wrecked? Yeah, again, I don't think there's a specific reason today, especially given ASML did so well and given PPI was really good and CPI was really good yesterday. So I genuinely am not sure. That's what I'm saying. We're all trying to figure out the reason. There really is no reason today outside of the general semi sentiment and CapEx beneficiaries that have been going down for the past month right here. Rocket Lab. Wow, 77. It touched 76, got to 80 at one point today. As now it's also down. The other thing about this is, now people might start, saying, all right, I'm up a lot on some of these names. I didn't expect to be up this much, even though I'm down from the all-time high that I was up a few weeks ago. Maybe I'm going to maybe I'm going to lock some of these gains in, and that only compounds the selling. If we get a massive V shape tomorrow, that's probably going to piss off a lot of people because if they sold today, and that might create a ton of FOMO to get back in. But if we don't, it might just create a lot more selling pressure from people to say, all right, look, I'm in at a good price. I should at least take some profits here. S&P also fading a bit here. So the sell-off's getting bad enough outside of the Max 7 that other sectors of the S&P, I mean, it was up almost 0.5%. Now it's barely up 0.1%. So seeing the market itself take a little bit of a hit from the top. Bitcoin still, the fact that Bitcoin is holding on to 65 is very impressive. Very impressive. Again, Dell, not sure why this thing fell 12%, but it is a CapEx beneficiary from server racks and wafers, and today is just not the day for any of those days, for any of those names. Netanyahu plans to visit U.S. on Saturday, seeks meeting with Trump, as per Bloomberg. Okay, so, I mean, that obviously might have the markets thinking that escalation around this war is still a possibility, which is fair. I just don't know if that's enough for the semis here to keep getting hit. Microsoft very close to 400, folks. Look at that, 397. Intel, are we below 100? We are very close. I don't think they want this thing to go below 100, but we are very, very close right here. CoreWeave, we've still got to be below 80, right? Yeah, CoreWeave 77. That's red. Wow, SpaceX. Someone said they looked at the order book flow. Actually, let me pull it up as well. Someone said there was 1 million shares waiting at 135 to buy this thing. Let me take a look as well. See if I can see that. Oh, yeah. Yeah, dude, there's 1 million shares. Look at that. Who led the IPO? JP Morgan, Goldman Sachs. Look at that. 1 million at 135. They do not want this thing to go below $135. That would be devastating to the success of the IPO. I mean, because at that point, everyone's red. You can't have everybody being red. Like, even the people, the big institutional guys that got in at literally 135, Ron Barron probably got in at 135 with $1 billion. He can't be red on this. Like, that's just not a good look. Not a good look. So we're going to have to see if they let it get down there, but I think they might be able to keep it up. Matt Money will be green. Matty Money will be green if it keeps going down there. All right, folks, that is it for me. Let's do word of the day. We'll be back on the market close. We will have a new guest on the market close to talk about crypto. I think you guys will enjoy them. I've been watching their content for the past couple of weeks and invited them onto the show. So we'll get some crypto updates today. We'll see what's going on with the semi sell-off, if this gets any reprieve. And yeah, I mean, hopefully things kind of reverse here. But if the semis have to take a breather for some of these other names to finally get some love, a lot of us have been buying some of those other names. So it's okay, right? Like spreading out and broadening out the extent of how this market has been rewarding different sectors right here. Word of the day, Mercari or Meraki. No, Meraki. Doing something with complete passion, creativity, and care. You can tell the presentation was made with Meraki. Every detail reflected genuine thought and craftsmanship. Meraki. I feel like I've heard this word before. Yeah, Meraki. We don't need to pronounce this one. This one's pretty obvious. Meraki. All right, that's what we got. Thank you all for being here. We'll be back on the market close. We'll see what we've got going on. We got a headline from Bloomberg just now. Anthropic is set to plan IPO investor meetings in the coming weeks. So that might also be something the market has to figure out how to squeeze out liquidity for if they're going to be purchasing that Anthropic IPO. And we'll see kind of how this plays out towards the end of the day and if this can maybe get a bit of a rebound. All right. Thank you, everybody. Appreciate it. I'll see you guys on the market close. Bye, everybody. Have a good one.